Feeling excited.
What's that?
Feeling excited.
Yeah, me too, man. I love doing these, especially session number one. Like I like doing the recap sessions, the follow-up sessions, but the first session is my favorite. Back to the basics.
Cool.
Give me 1 second.
Yeah, no worries.
Okay, sorry.
No worries.
Okay. Okay, housekeeping real quick. Have we talked about your montage? Are you set up?
No.
We haven't. Okay. Let's or do you have all your platform up and everything?
No, because I use the same screen for Zoom as well.
Okay.
And my toss is blocked at the moment as well.
Okay, so I'll draw it here and you just tell me. You have what size monitor you have?
32, I want to say, or 37 maybe, or 32.
Okay, are they side by side or stacked?
One is like just like a main one, and then on the side I have two 127, 124 verticals.
Okay, so you have a 32 like this, right?
Yeah.
And then you have another one next to it?
No, on the right side I have two 127 and 124 vertical on the right side.
Both vertical.
Yeah.
Okay, so you have it basically like this. Right?
Yeah.
Okay. Why are they both on the one side of it? Why don't you have one of them over here?
Not entirely sure, to be honest. I think it's got to do with the mounting, because the middle one is like standing on its own stand, and then I got, the mounted hands. So I wasn't.
Oh, it's because you have one mount for both of these.
Yeah.
Okay.
This is like freestanding on its own, and this is on a mount. Yeah, on the same mount.
Okay. So if you can, we want to move this one over here and be set up 32, 20. I don't know which side is your dominant side, the left side or the right side?
I would say right.
Okay, so put your 27 over here and your 24 over here if you can. Okay.
Okay, I'll have a look in there.
That would be ideal. And then in terms of what you have on these, where's this is your main trading right here?
Yeah.
Okay, and so the way you want to set it up is you want to have tape. So this could be larger. So basically it needs to look like get a picture real quick. I had the picture up and I accidentally closed it. So now I'm digging, and this doesn't have it. Okay, probably easier to draw. So you can still see this?
Yeah.
Okay, so consider having one ticker. So the bulk tape, then the baby tape, meaning the whale tape here, your speed tape here, your montage like this, and then your trading charts like this. Okay. And obviously this is not to scale, right? It would be, so it's one ticker here and then your other ticker here. So your tape, your montage, and your trading charts. Okay.
Mm.
On your main,
I think I've
monitor.
sent you an image of my layout.
Okay.
The main screen and secondary. The third screen I mainly use just a Discord and like Finviz and or BAMSec, something like this. No, it should be low. Oh yeah, at the yeah. So that's my main one.
Okay.
But because I mainly use like 2 different time frames. So let's say I have this one on 1 and this one on 5. I use this like basically for one ticker only. And then I have my DOS 4 tickers on a 15 minutes for to have like better idea waiting for levels and whatnot. And then I changed this ticker basically regarding on what I want to trade. This is the big orders and small orders.
Okay. Yeah. I know it's a bit of a change, but ideally, you want to try to set up the way I'm showing you so that the learning curve is less. Okay.
Mm.
Now, one thing that you will hopefully migrate into is that you'll get rid of that. You'll have the confidence to get rid of that TZ chart. Make sense?
Getting rid of trade zero chart?
Yeah. And just using the TOS charts to watch price action. Like you don't care where your arrows are, is my point.
Oh yeah, I suppose it makes sense. Yeah.
Yeah. So that it plays the psychology game, right? When you know where your arrows are. You should know where your entries are, regardless of if you see the arrows or not. Make sense?
Yeah, it kind of does because as well, it's sometimes I get once I'm like in position, I sometimes get too hyper focused on the candles.
Exactly. Because the
Especially
arrows are there.
yeah, arrows and especially if I'm as well like let's say in a losing trade or something, if it's going against me,
Exactly.
and then
Okay.
I'm just like completely ignore the tape and then level 2, and I'm just like looking at the arrows.
Exactly. That's why
Candles going up and down, and
yeah, that's why I want to get you away from that. Okay. So just let me show you one. Here's my main trading screen. Okay. I have 2 main trading screens, one above and below, but this is how they look. Okay. I have tape, whale tape, montage in level 2, micro chart, right? 1 and then 1 5 here, which it's already on. And then I can go to 315, I can go to 310, 330. The daily, okay, I don't use over here, right? This is my back testing setup. That's why you see so much going on right now, but that's all I use. I don't have so here's a Sterling chart, but I don't have any Sterling charts except for this one for Twitter posts and reviews and stuff, right? Once I'm done, which lies on another screen. You can see there's nothing behind here. Right. So your execution charts, you don't need the TZ chart. but I know that that takes a little while to muster up the confidence to get rid of them. Okay. But the sooner you start, the better.
Okay.
Okay. I know that with TZ, you can't isolate two tapes, right? You're stuck to one tape only.
No, you can.
You can have two tapes.
Yeah, because I have, like you see on my on my image as well. So I have two. I can add another, two if I want, and it's like
Okay.
completely, free basically, not tied to the montage. Because
Okay.
there's a tape on the montage, but I just saw don't use it. I completely,
Okay,
close
here's
it
your
off.
image. So this is just
Yeah,
one tape, right?
yeah,
Oh,
yeah. It
so
is this.
this is the same ticker?
Yeah,
Oh, so you're having to watch two montages to trade the same ticker because this is your all order tape and your bulk tape.
but I only use this because I have these two montages for the same ticker is mainly because I don't have a setup hotkeys with hard stops for long positions. So what I do, I enter on this and I have my stop ready on this. So once I enter it, I set my stop on this, I have it already ready, preset. So enter position and then set my stop on using, different montage. Mainly that's why
That
I
sounds so confusing. Okay.
it is.
Yeah. Bro, I mean, honestly, like I don't know a good analogy, but it's got to be simple, right? You're not going to wear two left shoes to go play basketball,
Yeah, no, I
right?
know.
It's just not efficient, right? You're not going to go play basketball with wearing golf gloves, right? It's just not efficient. You don't have feel for the ball. Like you're not going to play soccer in sandals. You know what I mean?
Yeah,
So you got to, I mean, trading is hard enough as it is. And then if your setup is kind
not
of
not optimal.
not optimized and efficient, mainly efficient, right? It's got to be efficient. So we got to think about really fine tuning this. This is very important. Okay. And I recommend, this setup right here, which I'll post for you because this is the way I teach. And if we're going to work together, your learning curve will be a lot easier if you mimic what I'm doing. If you ultimately, we work together and you see that, what you're learning makes sense and you're catching on quickly and you think, okay, well, I can live without using exactly his setup, then so be it. But at least in the beginning, consider having your setup something like this. Okay. Two tickers. Even if you just do one ticker, but you shouldn't have multiple montages for one ticker.
Yeah,
Fair enough.
yeah, absolutely.
Okay. So that's first thing. Really try to hone that in. And ideally, you go to something more like this, right? Where you have your monitors on either side, not both of them on one side. Right. And so
Mm.
you have your tape, 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 whale tape, montage, montage. And I know it might be reversed because it's TZ, but as close as possible. Primary chart, your thesis chart, your primary chart, your thesis chart. And then over here, maybe half the screen, you have your Discord, right? Your Discord all up here. And then your scanner here. And then, I don't know, charts for other tickers. And then I don't know how you want to effectively use, the rest of this space. Whether it's all charts or you have other things you like to track or watch or dilution tracker or, you know what I mean?
Yeah, yeah.
Okay. So think about that. All right. Let's jump right in. So the first section of this session that we're going to do is we're going to talk about definitions. And like I said, some of the stuff you've probably heard a little bit about because Mark is doing those sessions with you guys, and I think that's awesome. You know, I encourage him to share my information with you guys. But we'll get into some granularity here so that you'll have this video so that you can watch it over and over again. Okay. So first, let's go to most important one. Okay. Is the offer trap. Can you see that?
Yeah.
Okay. So mainly for the purposes of video, we're going to go ahead and read it. So an offer trap. This order flow pivot involves 3 target trading parties. Okay. These parties are prior underwater short liquidity, new long liquidity, and potential new short liquidity. Okay. So we have prior underwater liquidity, bagged characters. We have new long liquidity, right? Those interested in the scare tactic that's being used, and the potential new shorts, which is you and I. Often this order flow sequence will occur and can be used to verify whether or not there is a real seller or not. Okay, we're talking about an offer trap. I often use it as a confirmation within my setup trades. A large offer appears when the price is testing an upper range level, right? This can often be perceived as resistance, as naturally offers will step in to push a price down. However, resistance more than often comes in the form of a stack, hence the misunderstanding and subsequent trap, right? This can coincide with areas where short liquidity will stop as it's above the perceived risk level. Okay, so that's the offer trap being released, the goalie pool. Some traders are also aware that a large offer in such a scene can lead to a swipe or breakout, so they will be prompt to slap it in the case the bids comes in. This is why offer traps are two-sided. They're combo traps. The moment the price comes through said offer, that's the trap. The pivot is whether or not the bids come in to subsequently support the price for further follow through. Does that make sense?
Yeah.
Okay,
Yeah.
I'll draw it out. First off, the bids come in to push into said offer. Oftentimes it doesn't take much as the conditions are thin, maybe even spready. Then one of 2 cases will occur. Okay, failure. Example, the offer is breached and then the price falls back down below that offer level with thin or little bid to support it. Sellers often even step in the form of offer stacks. That is the real seller, okay, who may have just trapped buyers above and also stopped out target liquidity and covers. In the same way, this can be the confirmation if the offer trap occurred in a prior potential seller area. This is very important. The price may retest the level the offer stacks came in after the trap. This is the information that I'm almost certain that Mark doesn't know how to teach you because he doesn't know it himself. Okay. He can identify the offer traps, and I know you can probably identify the offer traps, but it's the preceding information and the post information that makes it that's more important for you to learn how to recognize. Okay, so it's important to pay attention to the size, the speed of the tape after the fact and preceding. Okay, the prices should not continue to come in back over the offer trap level. In the case it does, it will likely entice to pull in more short liquidity. So if the offer trap is reclaimed, so the offer trap is at 5, they clear it and then they stuff it below 5, and then they pull it back above 5. Likely what is going to happen is more shorts get in because they see the opportunity to get in above 5. And then of course that fuels the further squeeze by the rigger because there's more shorts in, meaning more stop outs, and that squeeze goes higher, right? Make sense?
Yeah.
Does that make sense?
Yeah, it does.
Okay, I'm going to reread from here. It's important to pay attention to the size and the speed of the tape after the fact. The price should not continue to come back in over the offer trap level. In the case it does, it was likely enticement to pull in more short liquidity. We're cutting away all the noise by only focusing on the key areas. In any setup, you're looking for the best risk reward price to hit, which is why people try to find the top or the bottom. A thing to note, these pivots are the highest quality on volume. Okay, I'll explain what that means. It's important to watch for higher volumes, sticks at key levels and extensions. These can render a false breakout on the chart and or as a stuff. Okay, so now let's draw it out. Let's move this out of the way. We don't need my setup anymore. These are just my daily charts. Let's go here. Okay, so as we know it, the offer trap is we come into a vertical push, right? We see the seller engage. So now we think there is a seller here. Okay, this is a wick, so to speak. And then the seller pushes down. And then we see that there's an engagement of price here. Okay. For me, it's a seller. That's what I'm going to show you, why this is a seller and not a buyer. Okay. But what this creates, what this has created is now you have a shelf range. Okay. Now, you know, if you're long, if you're going long and you think this is a washout, this is where you went along underneath here, right? For the best risk reward. If you're going short, you want to short above this level. So you want to take your position in here somewhere. Okay. The offer trap happens on what side of the montage? It happens on the ask side, right? We'll see a stack of 12, 10, 20, 25 like that, right? On the ask side. And then that will get pulled. The speed of the tape will increase. You'll see above market orders, the purple AA orders, right? I know Mark is calling them that, AA, purple. And then you'll have a speed and then it will reject. But what that note was saying is, okay, if it rejects and comes back and it creates a bid above this level, the likelihood is it's going to clear this out, right? Okay, but it has to be supported. It has to be supported with a bid. So what if I see this happen here, it pulls, and then I see 12, 20, 25 up here come in? What do you think that is? We've already had this rejection, and now the price comes back down, comes down here, and now it's hovering in this area, but we see this on the bid. What do you think that's called? I don't expect you to know this, but just take a guess, huh?
Bid prop?
Bid prop. Okay. What is a bid prop?
Well, I suppose when buyers step in at certain levels, so which would be above the offer trap, so or the breakout level. So if you're breaking out from 5 and it breaks out, and just as you draw this, like if it goes back down and comes back up, so let's say that's the 5 breakout level on a daily, let's say, or pre-market high, and it breaks out and they support it at that, that means they're going to push even higher.
Okay.
Because normally you want to see constant selling, and but the thing is as well, what I noticed, but this is happening only at the lower of the range, like on the floor wash, not at the top, is that I find it when they put a lot, so it stuffs, and then at the bottom of the range I see big numbers on a bid prop, basically propping the bid, and the tape is going red. I feel more comfortable in that position. I don't pay much attention to the big size on a bid at the bottom of the range, to be honest, if that makes sense.
Okay.
And I see it being chipped away, like, you know, it's how to say, I can see it getting lower and selling not stopping. So I'm like, okay, this is going to be like a floor wash.
Okay, so look at what I just sent you. Fake bid. Okay.
Yeah.
You said the first thing you said is a buyer stepping in. Okay. And that's essentially where you're not, obviously you're not incorrect, but is where I disagree, right? Because let's think about this. Let's say you're working with a large cap. Okay. And have you ever traded large caps?
No.
Okay, so large caps is organic price action normally, right? And so what happens if you see like way down here, let's say price is trading at 50, But down here at 75, you see 100. And then at 75, 10, you see 20 and you see 90 and 80. What's going to happen? Most likely.
It's gonna go to 75
Why?
to grab all the liquidity.
Right. Supply and demand, right? Supply and
Yeah.
demand. There is supply up there. If the demand is there, demand equals what? Volume. Okay. So anytime we talk about demand, we're talking about volume. Okay. People willing to participate. Demand is volume. Okay.
Mm.
Very important concept. So price is going to go here if the demand is high. If this is high, because there's volume, price is going to go get that liquidity, right? But in the small cap world, but you'll see buyers on the tape going for that large cap liquidity, right? And so we think opposite in the small cap world. What are they doing by setting this here? Bid prop, if it's fake liquidity. Enticing price to go higher, right? So
Yeah.
my point is that real buyers don't show their size. Does that make sense?
Yeah. So you saw don't spook, the other side.
My point is that you should assume that this is a seller. If you're at the highs, if you're extended, if you're at a level from the daily, right? It's all contextual. It's always contextual. You're here to learn how to read the tape on the short side. So I need to make sure that you assume many things. This is not a literal concept that doesn't require some context. We're talking about something that's already made a parabolic move, that's gapped up 50%, that's gapped in the day, it's gapped another 15 or 20%. It's set a pre-market high, it's rejected, et cetera, et cetera. The things you're used to seeing in small caps, okay? We're at the highs, we're at a shelf, we're expecting some sort of mean reversion, right? Hopefully down to the 50% of the total move, okay? So the point being here is real buyers do not show their size. So a bid prop is fake liquidity. And we say fake liquidity because it's actually a seller trying to fill his orders. And that's the reason why this level is so important to us, because once we identify that this level is being sold, then we know that all moves above this level, if we can define that they're AA orders, they're inorganic, then we can get our entry as close to this level or above this level, waiting for this fail, because we've already identified that the seller is sitting here. Make sense?
When you say identify that the seller is sitting here, is identifying by bid prop.
That and the tape that you're going to see concurrently with that. And we'll get into that in the second half. I know you're probably itching to see that in action, but keep that in mind. We're just talking the concepts right now. I'm going to show you how to identify from the tape that the seller is here because he's here, right? So I think the seller is here, and then I see it on the tape, and the tape confirms that the seller is actually here, okay? And so my assumption is that the seller is there until proven otherwise, right? Because you're getting all this manipulation in here, getting chopped up and getting these erratic moves, and then it finally fails, right? That's on purpose, right?
Yeah, so they distributing their shares.
But based on your experience of seeing what small caps do, you know that that shelf is typically, like you're saying, it's a distribution for them making money. Sure, it's a distribution, but it's also an accumulation for them, because the rigor is trading within this range and chopping people up below and above that, right? So you're coming in, this price is doing this, and then it comes here, and then you see this big red sell, and now you've slammed the bid here. What are you? You're a low slammer. You're a low slammer expecting price to go below. And then what happens? They go back up, and you stop out, right? And then you hesitate, and you see this and you think, shit, it's going higher, but you miss it. And that's actually the place to enter, which is above the shelf, right? And then it finally comes down and it does it again. And then it only comes up halfway and it does it again. This is your time to enter. Whereas typically what's happening is we're entering here or entering here, and then we're stopping out here, right? And then we see this candle happen and we start entering here and here, and then they pull it up and we stop out here. Make sense?
Yeah, yeah,
Does-
been there.
Been there, right? We all have.
Been there.
Yeah, we all have. But that's the manipulation. That's hard to understand, because there are two components to trading, right? There's an art and a science. And the science is pattern recognition, back testing, recognition of consistencies or inconsistencies. And then the art component is the tape and level 2. So for me, I'm a very methodical person, scientist, engineer, whatever, right? So all this chart analysis and technical analysis and seeing price action in hindsight is very easy for me. Okay, I can see it all day long. But what was not easy for me was this concept of the art component, because it's not my natural way of thinking, right? That's the reason a lot of these kids like Sovereign, Colin, and Morg, and Norb, and or I don't know how old Norb is, but C, all these guys, they're just young kids that used to just play a lot of video games. They're not necessarily scientific and methodical, but what do you think their forte is? Speed, right? Speed recognition, reaction. Why? Because they play all these video games where they have to, turn their head, swivel quick, shoot, blah, 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 like Fortnite and all that, right?
Yeah.
So they've trained those motor skills, is my point. Okay. So we looked at a little bit of bid trap. We know what an offer trap is. The offer tends to pull, right? You get a bunch of AA orders that move it up really fast. The tape speeds. We're looking at the bulk tape down here, and we see that there's no volume in here, but the price just shot up on the offer trap here with AA orders. But in reality, we see very low volume, right? Relative to the rest. So we know that offer trap, if they pull it and it's not filling, then it's likely going to reject. And that's the trap for the chaser longs. You know that already. You've seen that 100 times over. But what you're not seeing is what's happening beforehand. Okay. And that's why you get caught in these. You take this offer trap and you take maybe the halfway point or the moment where it, let's remove some of this noise, the moment where it comes in and finally rejects here. And that's where you get in, but then they absorb it here and they shoot it higher on you. It's not because you didn't recognize or understand the offer trap. It's because you didn't identify that the seller was in first. Okay.
Okay.
Just trust me. I know it's a lot of information, and that's why we're recording, and you'll be able to watch it 100 times over. Okay. But just trust me that what I'm saying is something that's very valid. Okay, so let's go here and look at these. Open. Okay. Let's skip stacking, hidden buyer, hidden seller for now. We'll just look at those on the tape. Flash and spoof, similar to bid propping, can occur hand in hand with such. In a scenario that the price comes down to test the low of the range in question, a single large bid will occur. Okay, this is almost always in thinner tape conditions after a pullback. What's different about this bid is that it will stay on the book until it either slowly comes down on it or some offers come down to push the price into said bid. The entire bid will get filled, cleared out, and the price subsequently washes the books. Okay, so that's what I was defining here. Okay, when I was saying that, you'll see the offer trap come down and reverse on us, then that was not spoofing, right? That was the seller that was here, or that we haven't identified here. Now we know that this was a bid prop, and the bid prop moved up to the top of the level, right? To the top of the shelf. Does that make sense?
Yeah, so it's I think it's why I like to call like a leg up.
Okay.
It's like it claims like a level, so sort of like it trades and then gets like an offer trap here, it pushes and it holds that offer trap, and then it starts like makes like a new shelf, but it's above this level.
Yeah, so you're talking about consolidation, expansion, consolidation, expansion, consolidation, expansion, level up, right?
Yeah, may make a
Whether this is accumulation or distribution, we don't know. It's just we know it's a consolidation. Whether this is distribution or accumulation, we don't know. It's just a consolidation. Sorry. This is an expansion. So level up. What you call a level up, I call an expansion in price. Right? And a real expansion holds that next level, right?
Yeah.
Okay. But we're looking for the fake expansions, which are the fake breakouts. So we're trying to trade this and this and this, right? Whether it happens in the form of a chop, 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 and then a move up and clear out, or whether it happens in the form of chop, 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 and then chop, 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 microstructure getting thinner, 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 and then down. We're trying to trade this, right? So we're trying to trade the expansion. Okay. So I agree with you. What I don't necessarily like is that you call it a, well, you were answering my question, so I agree with you. You're calling it a level up because I mentioned that where was it? I mentioned that the bid actually came in and pushed higher. So you're absolutely right. Okay. But now if we learn to identify where the seller is ahead of time, we can recognize whether that's spoofing or not. And also you'll see it on the tape. So if that seller comes in and hits hard here, but there's really no volume in here, we can define based on this that the seller has shown up here. And even though this curled, let's say that it hasn't gone this far, right? Even though this started to curl, we were able to identify that this is a seller. Sure, he moved up, or he was never down here and he only presented himself here, but we identified that he's present. And now we're just playing the retest. Okay. Now we're going to hit it in this area or hit it right above this area. Right. And that all depends. What if we have a $7 here or a $5 here, like a psychological number? You know, we might only hit 25% here and we're going to hit maybe another 25% here. But in reality, we're playing our risk level as the 5. So if it pops into this is where we want to load the theoretical boat, right? If it never pops into that 5, then so be it. I go on the trade with let's just say it comes to here and it comes down. Well, we're going into the trade with 50% of our desired size, right? Because it's risk first. But my point is that we're going to identify where the seller sits before we start putting on serious size. Okay. Whether the seller is sitting on the bid side or on the offer side or on both sides. Okay. We'll be able to identify those things. Any questions? I know I'm zipping through it pretty fast, but I just want you to have this.
This thing, when you say like, let's say 5 will be 7, it can be any, like, let's say daily level or something. It doesn't have to be 5 or 7 or around dollar. It can be whatever, like 7.30 or whatever, if it's like, you know, pre-market high or something. Basically a level of interest.
Well, in this case, I was defining your level of interest was probably around here. I was just defining that if your level of interest is very close to a round number, like a 5 or a 4 or 450, you want to plan according to that as well, right?
Oh yeah, okay, yeah.
Because a lot of times A lot of, and actually we're noticing the opposite now. A lot of us are planning for that 5, but they'll keep it like 489, 490. So they know that a lot of shorts are planning for that 5 breakout. So they just avoid it getting there. But what I
Yeah.
was saying is that if you're sizing into a trade, your level of interest you should be defending yourself to the nth degree, right? Sure, you want the size on, but you have to keep in mind that there might be a psychological level right above. In this case, I was just using the example of a whole dollar number.
Yeah. Okay. Yeah. It makes sense. Yeah.
Okay, good. All right, let's go to the next one here. Okay, that's flashing and spoofing. So the refresh is where we want to see, like it explained on the offer trap, right? So a refresh of the seller buyer in question, we can look for refreshes to possibly confirm a seller buyer. In this refresh, we want to see the same seller buyer step in or have the bid offer stack, which will break through our desired level, making our initial seller thesis wrong. This is how we avoid sizing into a seller on first go. Okay. So what I'm saying there is if we come in to, if we come into this, actually, let's go down and use these shelves. Okay. If we go down, I wish there was a faster way to erase, and you can't enlarge the eraser. I remember Microsoft used to have a feature. If you did this really fast, it would make the eraser really large, but not anymore. Okay, so, all right, so this is our 2 shelves, right? And just the same shelf, just showing one with low volume push and one with higher volume push. Okay, so I was about to explain refreshing, right? So the refreshing component we talked about, if this is our shelf right here to here, then if we see the offer trap come in, NVIV will be a perfect one. I just thinking of one. Okay, if we see the offer trap come in and we have AA orders in here and it's speed tape, because we already know that a seller has engaged here, at least for now. But more importantly for us, we want to identify the sellers that are in the seller engaging here or here. Why? Because we want to trade against this. We want to trade against this. So we want to be certain, obviously not certain, but we want to know that the seller is in here or here so that when this does pop into this level, we have the confidence to take that trade and know that it's likely going to fail. Make sense? But the
Yeah.
okay, but the refresh component is, okay, so now we don't know if the seller is in, we don't know where the seller has engaged. We think that the seller is in this area because we have this large wick and then it rejected. So now we think there's a seller here. And now we think the seller has moved down a little because he didn't allow this candle to push. But then we have this reclaim, right? This big reclaim here. And we think that the bid is moving up, right? But in fact, what this is the seller confirming that he's washing this thing down. But he's not ready because, like you said, he's got to distribute, right? He's got to distribute his shares. So this price action is going to happen for a little longer. Make sense?
Yeah.
But this, for so many people, when you see this, what does it tell you?
I would think it's like a trap.
A short trap?
Yeah.
Okay. So good. That's good. You think it's a short trap. Most people think what? It's a reclaim. It's going higher. Right? But you're thinking like a someone who's read all of Trade the Matrix information. You think it's a short trap.
Yeah.
Right? So if
Yeah.
it's a short trap, then what's going to happen to shorts once it gets above this level or this level?
Probably getting stopped out.
they're going to get stopped out, right?
Or feel uncomfortable.
Or feel uncomfortable.
Risking
Exactly.
this.
Reduce their size. Exactly. So, but you've identified that this exchange, sure, it's a short trap. I agree with that. But more importantly, it's a seller showing that he's done with this area, right? That this thing's going down. He's washed it. He's washed the shelf bottom, but he's not going to make it so easy for you and just hover price here and then go down, because he knows that most people can't read up here and most people are going to get short inside of here. So what's he going to do one more time? Clear out, which is what he's doing here, right?
Yeah.
Right. He's going to clear out one more time. And all these shorts that got trapped in here and the ones that were also in this area, they're going to get wiped out, cleared out here. Okay. So once we can learn to identify that this is actually a seller hitting it hard, that he's washing his shares out, then we're going to want to short every pop. Okay. We're going to want to get anywhere up in this range, and even better would be up in this range, but we don't know or think that price action will get there. So the refreshing component is what we're really just looking for in the bulk tape. Okay. We don't care about refreshing on the smaller tape. Now we do if this thing is float rotating 100 times over, right? But you already know that if this thing is rotating 100 times over and is holding the shelf, it's probably going to make another leg up, right? You're already cautious of that. Would you agree?
Yeah.
Okay. But how do I identify when it's okay to keep hitting it? Well, that's depending on market cycle, right? That's a component that, sure, it's definitely a component of tape, but a tape can do the exact same thing. And in a strong market cycle, it'll go the opposite direction of what you would like it to, right? A tape can do the exact same thing in a strong market cycle and a weak market cycle and do the opposite. And that's just because of the market cycle, right? That's just something that's going to require intuition to understand, which means screen time. Does that make sense?
Yeah, the market cycle thing for me it's still very much identifying, at least, it's something that, yeah, it's going to require much more screen time, definitely.
Well, it's also going to require you to start thinking like a back tester. The only way you're going to recognize market cycle is if you see the macro picture, right? The concept of, you see the trees in the forest, but if you step back, you no longer see the tree, you see the entire forest, right? And typically as small cap, as intraday day traders, we're just looking at little glimpses of this big circle, right? And we forget to step out and look at the whole thing. So don't think it's only about screen time. It's also about the manner in which you are analyzing charts over a week or over a month or things of that nature. And for that, you need, I recommend a component of back testing, which we'll get to. Okay. I know we talked about it a little bit that time we chatted, and I think I stressed that point quite a bit. And like everybody, it's not an easy part of trading to get in tune with, unless you're already a statistical type of person and you know what you're looking for, because that's the problem with with the current computational world we live in. There's so much information that most people don't know how to cipher through what's important. And that's exactly, the great analogy is the filings, right? The riggers, the underwriters type out this massive, confusing document with so much information. And if you don't know what you're looking for, well, you'll miss the trade every time because you're stuck digging and digging and digging and digging. Well, that's true of the world in general, right? And back testing, yeah, I could sit here and I could download hundreds and hundreds of lines of information of tickers, the pre-market volume and the pre-market high and the gap percentage and all that. But then how do I break this down to something that's going to help me understand what's going on? That's the hard part.
Yeah, I totally agree with that. Yeah.
Okay, so we'll get you there. We'll get you there. First and foremost is the tape. Okay, so we covered bid prop. Bid prop, most important thing is what?
Volume.
Bid prop. The most important concept I said about a bid prop. Real buyers do not show their size. Okay.
Oh yeah.
So always assume that when you see a stack on the bid of multiple numbers, a double stack, a triple stack, or a quad stack. So this would be right here. So this 20, 15, 13, that's a 3x2. So 3 levels, 2 digits. Okay. If we have 100, 99, 101, 115, that is what?
Triple.
Well, triple. We're going to assume that's, maybe that's,
Oh,
yeah, we're just going to assume that that's 100, right? So that's a triple, that's a quad triple, right? We have 4 levels and we have 3 numbers.
Yeah.
So it's a 4x3. So this is a 3x3, this is a 4x3. Okay. So when I talk like that, I'm always talking level first and digits second. Okay. So we'll call it a triple or a quad or a quad. But the point is, and that's just nuances. The point is that when you see this as a short seller at the highs, as someone who understands manipulation to some extent, this right here, real buyers bid prop, does not equal demand. Until it proves otherwise, you're always going to assume real buyers do not show their size. Okay, so you're going to assume that this is a seller.
So would you say this would be the same at this level? So this, when it breaks there's like fake breakout or whatever. So, and there was an offer trap at this level, which is like here. So when it breaks the offer trap and above that offer trap, this comes in, would you still say it's a seller bid propping, or is there demand coming, real demand coming for, push it higher?
I can't answer that question definitively, right? Because that's where you have possible refreshing, right? If it starts refreshing, then it's possibly an actual bid prop that wants to move higher. See, it's always, the thing is that it's always a bid prop. It's just that the rigger can identify the volatility of the move. And so he can bid prop this until he can't, right? So if the algo can identify roughly how many people are trading this, which they can, they have an understanding of how much small equity liquidity they have and how much retail traders they have. They can utilize that bid prop and just keep moving the bid prop up, which we translate that into a support. But in reality, that's just him finding a higher price to sell his shares at, to distribute, right? Because ultimately, when he does reverse the position, he wants to have the highest price possible, right? Just like we do.
Yeah.
But for them, it has to happen over time, because you and I are trading, 100 shares to 10,000 shares. And these guys are trading 10,000, 20, 30, 60, right? 100K. Like, and this is their position, all this added up. So they have to do it in small chunks, right?
Mm.
So to your question, yeah, you're always going to err on the side of caution and assume that is an actual bid prop. But ultimately, if you see that pattern of like, you look at, I'll use someone in your room, right? Cody's charts, even though the price action was going up and down a lot, ultimately what happened? Ultimately,
Well, it faded.
it did, right? It's just a matter of when. So would you say that it had a real bid?
Well, apparently not.
Apparently not, right?
Yeah.
What was it? Just a bid prop manipulating higher, 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 right? The rigor, the algo and rigor saw the opportunity to move the price up on low liquidity, and you'll define that here. You know, your volume won't be very big, but the price is still moving up. HKD is a perfect example. I mean, look at this thing.
That thing was crazy.
Look at this thing. Here's the order flow for it. Okay. Here's the daily. Look at the values here. 2,000, 1,000, 3,000, 4,000. Like, where's the volume? The volume is down here at 400. And that's not even volume. Look, 30K, 28K, 12K, 10K, 14K, 19K. Okay, there's some volume down here, 194K. And now look up here. 3, 11, 600, 1,500. Like, this is thin, nothing. Right. And it went all the way to, I don't know, 2,000 or 2,500. I don't know.
2,500, I think. Yeah.
Right. Like, that's not liquidity. So my point is that they can, you know, low float and coming from the bottom, all that stuff, they can push it up on a bid prop. Real buyers do not show their size. Do you think there's an actual buyer on this? I don't think so.
I can't believe anyone was actually buying it above 1K or.
Yeah, I think there's a buyer down here in the 100, 200, 300, 400 range that was pushing it. But after that, I don't think there's anybody on it. I think this is just straight liquidity manipulation.
Most likely.
Okay. So the bid can continue to push. And it's still what do you call it? A bid prop, a seller. Now the difference now where I would be cautious is if you have a hidden buyer, a hidden seller on the tape. That's very different. Okay. If you have a hidden buyer or a hidden seller, that's defined by a price action moving up without a bid prop, right? We just see ones. You see the tape, you see the demand is in, and the tape is speeding up. But on the montage, you never really see any real support or bid prop, any fake. You just see zeros and ones and twos. Okay. But you see a lot of algo repetition on the tape, which is high digits. Okay. So let's look at that now. Let's just take this for okay. So now the basics of the tape. So when you see this here, what do you think is going on? Can you see this tape on Evo?
Yeah.
Okay.
Yeah.
Okay. Are you able to trade at $3.31 and 82 tenths and hundreds of a cent?
Not at all.
No, right? And do you trade 214 or 290 shares or 9941?
Also, no.
Probably not, right? You're going to trade 100,
Yeah.
750, 100, 1,000. Sure, maybe this is a 10,000 order that didn't get completely filled, but I'm always going to assume the worst case scenario. And my assumption here is what? What does this tell me? Lots of digits and funky numbers.
Algos?
And inside the bid ask. Exactly. Algos. So if you see zeros and ones here and you don't see any fake bid propping and you don't see offer traps, and you do see offer traps, but you just really see small numbers hitting here, and this thing keeps churning a higher number, moving, the price action is moving up, what is your first assumption? Hidden buyer, right?
Yeah, for hidden buyer, I'm always looking actually, for red tape, not a green tape.
But price is moving up.
Yeah. Pretty much, it's kind of, yeah. So it's, as you said, like there's gonna be one or something on a bid, and it's like slamming red, but it's just like literally standing at that 30, 31 for some time, and then I look at, I want to see on the big tape, I want to see some green orders step in.
So you have half of the component. I love that you said you want to see red on the tape, because that's where I was getting to next. Absolutely want to see red on the tape. But now what did we just talk about? What is the
Yeah.
next? What needs what? So we, a lot of times in trading, we work in a world of confirmation, right? What is the confirmation that it's being absorbed? Two things. Algos kicking in right underneath. You see this 332. What number did they kick in right underneath? They didn't go all the way down to 331, did they?
No,
They went to 331 and change. Makes sense. They're propping it inside of the bid ask. Why? Because you and I can't trade that unless we're hitting market orders. Okay, so this is support, confirmation of what you were saying. And on top of that, you don't really see a whole lot of numbers on the bid over here, bid prop. Okay, so red tape followed by algo support, and not really seeing a whole lot of bid propping on the actual montage on the level 2.
Yeah.
Make sense?
Yeah.
Okay. Okay, give me 1 second here. Open up a couple more things. Oh, we have that one. Okay, we don't need that anymore. All right, so let me send you, and you, I don't know if Mark has shared these, but here's some quick definitions outside of the ones that we just put on the video, which you can review there. I lost those documents on my last purge, so luckily I had pictures of them, or pictures that I had sent to you guys. Okay. We need to cover spread. Are you familiar with spread? Spread manipulation?
Yeah, I have an idea sort of how would they use it, but I wouldn't say I'm very well familiar with it.
Okay. I think I've covered it in some of those
Yeah, Eric's meetings, yeah, it's where
yeah.
they open the spread and basically make you all the bid, hitting on the bid, getting like low fills, and then they just literally with low liquidity can push it up to stop out and use your stops to go a little bit higher.
Okay, but what I'm going to teach you, okay, so I don't need to really explain the basic concepts. I'll do it for the video, but yes. Okay, so you have a ticker that's very spready. You have a lot of AA orders pushing it up. You don't really have true bid support, as in refreshing or price action truly moving up. They'll drop the bid and have, like you said, low slamming shorts, and then they'll move the bid up, and those people are immediately trapped, especially since the spread continues to stay large. Even though the spread is not as large as it was here, they're not going to be able to get out on the bid. So now they've been squeezed from whatever this price was to whatever this price is, and plus this price to this price, right? Because they're going to have to get out on the ask.
Yeah.
Right. So it scares a lot of people to get out. How we're going to use it is we're going to use it again. We're going to use it to identify that the seller sits here. And then when they pull it up, that's when we slam the bid. This is where we click our button, where we get short right here. Okay. When they pull it up, and they do that, I like to say that they're doing it as a courtesy for us smart short sellers. Okay. But it's not true. But this, when they bring it up, when we identify that they've done this over and over, move the bid up and down and not really moving the ask isn't chasing it. We're not getting this action of slamming, right? Which would be stacking. right? Another concept that we're not really going to talk about it in depth, but I think you understand stacking, which is the same as refreshing on the bid. But
Yeah.
stacking, as you know, is if this offer came down and got right on top of this, right? Forces price further down.
Yeah.
You agree there?
Yeah.
Okay. So for the sake of just having it, where is stacking? Okay, here we go. So for the sake of the video, so continuation order flow move can often go hand in hand with soaking, occurs in the form of bids and offers, most self-explanatory of the elements. Okay, so yeah, why is it the most obvious of the elements is because it typically comes with an offer that's already shown and then the price is walking down and you see it. Didn't you used to use Bookmap?
Yeah, I did.
Okay, so you saw the offer, you saw the cloud walking down and you know that as an offer. Can you identify that on the montage?
Not really. I
Not,
don't think so.
okay, then we'll work on that caveat. Yeah, the stacking. So we're not seeing the stacking come down. Instead, what we're seeing is that the offer moves up. The offer moves up another level, and then the bid chases it to some extent. So the bid moves up from here to here, but the spread is larger again, right? Small spread, huge spread, and then a medium spread here, right? And then we'll see that this bid will drop again, and then they will all of a sudden bring it all the way up to like this one. Sorry, bid. Very similar to this one. So now we're here on a bid. And we're back with this spread. And so this is the repeatable pattern that we're looking for. We're looking for this to occur. And every time this occurs, every time they pinch the spread closer, you're going to see a spurt in the tape, an empty spurt. When I say empty, it's going to be volumeless, but you're going to see the tape speed up. And so what they're doing there is because these low slamming shorts that got in here, the low slamming short sellers that got in here are not able to get out here, right? They're stuck here and they're stuck in this spread. What do they have to get out on? They have to get out on the ask, right? So now they've entered their, I don't know, they've entered at 14 and price action is already up to, 14. The ask is already up to 15.10. Okay. And is that ask real?
And what sounds real?
Is that real? Is that ask real? Is that actual liquidity up there? The answer is no. What that is they're just trying to scare out the shorts by making the spread higher. What you're going to pay attention to is this. I'm going to teach you how to see that the seller has engaged at this level. He's just walking the price up before, the final, like an IMTE or a AMTD on day one, or remember those tickers like ANGH and those D-SPACs?
Yeah, I didn't get a lot of chance like on trading the open, so I probably wasn't. I was more concentrated on like multi-day runners.
Okay. Well, in the multi-day runner arena, you see this. It's a little tougher to read. It'll take you time to recognize this. I teach it on the higher float tickers because it's obvious to see. And then once you have enough screen time, you'll be able to recognize it on the multi-day runners higher rotation with actual more liquidity. It's harder to see on those. So that'll take us a little time to get to that point.
Okay.
But the idea is that you're recognizing the concept to begin with, and you're kind of seeing, okay, what are they using the spread to manipulate it? And by you just questioning that, it forces your mind to try to see if it can identify it, right?
Yeah.
Okay. Okay. So in terms of entries on shelves, what do you look for? What do you look for when you see a shelf and you try to enter? Use this shelf as the example right here. We're going to do a little interactive work on how nuances in the candle structure that you can look for to get in on the shelf.
Yeah, I always want to see a clear out. If it gets like makes the shelf the highest, I always want to see a clear out. And on a clear out, what I want to see is ideally I want to see like a stuff. So either gonna refreshing like on the ask.
So you want this right here. Would this be a stuff or no? Because of the high volume or no?
Would have to, I don't know, would have to see the tape how it was rejecting, but I want to see like the violent rejection, and as well, yeah, the volume is actually important.
Okay,
But
let's say that this is like this. That I have like one of those delta indicators, and this is all red, and this was all the green. Is that a stuff now?
yeah, I would say so.
Okay, I agree.
If like let's say prior volume, especially if the prior volume was something like this, prior to happening this, and then it does this, then definitely I would say yeah, stuff.
Okay, so largest volume.
Yeah.
Okay, so if this is largest volume, then are you comfortable entering on the next candle?
Personally,
In theory?
I believe so. Yeah.
Okay,
Yeah. I probably would be.
because the seller has showed himself here, right?
Yeah.
Or at least to here.
It's as well like let's say contextually, depending where it all happened. So like let's say if this is the open and it's just like goes up, it like fifth minute or third minute, I don't know, of extension, and it hits like pre-market high, let's say somewhere this level, and it does this, yeah, I would say like okay, it's toast. So I probably should be fine like entering here somewhere, getting in
Okay.
this with with indication of what's happening on a tape and level 2.
And
Whereas here
what's your risk?
probably would be risking depending on my entry. If I get like a really good entry here, yeah, I would be risking this then.
Okay,
But then once I see rejection, I would probably lower it to this. If it like saw this fade weakness, and then I would probably lower my risk.
okay. Now let's go to example number 2. What would you be comfortable taking here? Notice it's the exact same candles. There's just one difference.
This one as well, contextually, if the volume was prior volume very similar to this and it just does that, I would be waiting for breakout and stuff over here.
Okay, excellent. So
That's
you
where I
would
would
not feel
initially.
comfortable getting in below this level,
No.
right? Whereas here, you are comfortable getting in, hopefully not down here, but you're comfortable getting in maybe,
As close to this.
yeah. Okay. Good. Okay. So continue on this one. Sorry.
So yeah, I would like, yeah. So this is similar volume, and then I would like to see speed of the tape as well, and this do a high volume, does this breakout, and I would want to see at the top is tape, small tape running green pretty fast, but it's stalling at sort of this level, maybe a little bit above that level. It starts stalling, and then I would be looking at the big tape. And the moment I see first 1 or 2 big orders of sell coming through, I would be hitting it even on a bid maybe, and try to, yeah, risking this basically.
Okay. And is that tried method for you, something that you've been successful with,
Yeah,
to waiting for this? Because that's a, that's a finer caveat of trading, of tape reading right there. So you're waiting for the big boy to come in and show you confirmation.
yeah.
Is
I want
that
to see. Yeah, I want to see this go green, and then it's just price keeps stalling and it stops moving. Stops, can't bring it up. And if to add to this, if I will see on level 2 a hidden buyers and like on the offer just one, and a lot of green running on small tape, and it just can't push past this. And then once I see, yeah, confirmation, once I see the big print coming in, I would be slamming it.
is this ask or bid?
That's us.
Okay, so you're
Yeah,
saying a hidden seller.
yeah, yeah. That would be perfect. You're not,
Okay.
you don't always get it, but
No, because you said hidden buyer, but I think you're saying hidden seller.
yeah, sorry, I meant
Okay,
yeah.
so that's wonderful. So you know how to identify, one way to identify a hidden seller. So great. That's good to hear. So what if this was read this way and this was green like that?
Green on and closing red.
Oh yeah, sorry. That's not possible. Yeah. Closing red. So big red.
And the following one, that's the volume.
No, no, no. You can delete that. You brought that
Oh,
in.
so yeah,
So
so like this.
how would you define this for yourself? Wouldn't you be more comfortable in taking this entry because of because this, even though this wasn't the first red candle like it is here, the first major sell-off showing all this seller volume here, but because is the second candle, the indecision candle, this pushed up hard, but the seller looked like he came in and really stuffed this level right here. Wouldn't that lower your risk level? Would that lower your risk level?
I'm not sure how I would feel about it, to be honest. I would have to see something, yeah, something on a tape on times and sales. I would have, I would want to see like big orders, and then maybe on the, if I see on the ask, if they do like an offer trap, but it keeps refreshing, and maybe even like adding more somewhere around these levels. So this is going to be a buy. You're going to see some buyers on the tape, but this is, yeah, it's going to be every time it comes, let's say, to the $5, which is this level. I want to see it keep adding. So once to 210, then next time it's, you want to see like 250, maybe some additional stacks, coming through as well. So not only 200, adding more on each, like at each pop to that 5 level. I want to see like keep adding more, refreshing, and then as well some red on the tape on a big tape.
Okay.
If I see that, then yeah, I would be probably comfortable taking this.
Okay. Good. All right. So what we're going to do is we're going to simplify all that for you. Okay. Well, I'm going to give you an exercise to start practicing when you trade. And I want you to, I mean, you don't have to do it every day, all day, but pick a day or pick a session, meaning morning session, pre-mark session, or afternoon session, whatever. Pick a session a few times a week to do it. But basically dropping your offer, your hotkey on your offer to 1 share or 5 shares. I don't know how much you trade, but something very insignificant. And then the idea is you're gonna, and I'll show you this on tape as well, but it's going to be an element of time. Your entry is going to be an element of time of shelf creation, the way the shelf is created. Okay. And an element of speed of tape, speed color. Okay. Which this really, I mean, this right here goes into all your concepts, bid prop, bid shove, which I'll cover here in a minute, bid shove, offer trap, stacking, etc. Spoofing. Okay, so we're kind of tying it together in the fundamental form. So first thing that you want to do is identify the level of the shelf. Okay, and the level of the shelf is best identified by your second candle. Okay.
Second candle
Created on your 1 minute chart.
after push. So it
Yes.
pushes, and then
Yes.
second
Definitely.
candle after push.
Definitely. Okay. Parabolic move is a must. Okay. Parabolic move is a must. And then your second candle defines your shelf. So at that point, you're going to come in and you're going to mark with a rectangle or with lines, whatever you're comfortable with. And you're going to mark your shelf. Okay. And then you're going to wait for the first candle. Because let's say this candle is red. Okay. Well, no, that's not true because I want it green. Let's say this candle did go green. Okay. Where does the candle start when it's green? Down here, right?
Yeah.
So it started at the bottom of the shelf, right? Make sense?
Yeah.
No good. Okay. We don't want to enter starting at the bottom of the shelf. So what we're going to wait for now is once we've seen our shelf create and we see any candle that opens in this area. Okay. So cut this thing in half. And as you get better at this exercise, cut that half in half. Right. But for starters, just cut the shelf in half. And then you are trying to just take entries as close to this line as possible, like you said. But here's the caveat. You're only going to do it on candles that open at the highs. Does that make sense?
So next one should be, let's say, opening here candle. If it opens here, I'm not looking to enter at these levels.
No, you are. All that matters is that the candle opens in this upper half.
Oh, upper half. Okay.
Upper half of the shelf, right? This is the shelf. This is the shelf. Shelf top, shelf bottom, and midpoint, and shelf mid. Okay. So if the candle opens in the upper half, opens and pushes, and you still have 20 seconds left on the tape, which I'll show you. Okay. You take the trade. This is going to be tricky once you get to this part. But for now, what you're looking for is that this level rejects. My point is that if this candle goes up, I know the 20 seconds stumped you. If this candle goes up and there's only 10 seconds left and this is pushing up, what's the likelihood of this candle going to do?
Gonna hold.
It's going to close higher, right?
Yeah, it should.
It's going to close higher. If when it was up here in this area, there's only 10 seconds left for the candle to close, the candle's going to close higher, right?
Yeah, would make sense. Yeah.
Most likely.
Unless, yeah, it as well, contextually, if it's highest candle of the day and it's, you know, pushing past that level, then yeah, then it can stop. But if it's just on a same volume or no volume grindy, then it's most likely gonna close above. Yeah.
Well, I'm trying to like, I know this stuff is very simplified, but there's a reason for that, right? Because, you know, as you get to learning, reading tape and doing it more, we start complicating things. And if we haven't been looking for the right necessarily the right price actions to help us read it, then yeah, the context is important, but you've also got to have the fundamentals down, right? The very basic components of it. And so what I want you to start identifying on tape is if a candle opens, let's delete these. If a candle opens above this line here, the midline, and there is still 20 seconds, at least 20 seconds left. Like, let's say it pushes, right? It's pushing. It's pushing. But there's still 20 seconds left on the tape when it gets up here. The likelihood, because of the previous price action and context, like you said, the likelihood if there's 20 seconds left for the candle to close, you still have the opportunity to stuff. Okay, that it will stuff.
Mhm.
Okay, so I want you to just start paying attention to that, because those are your entries. Those candles, those are your A grade entries, your candles that clear out and are pushing and still have enough time. And it's not just 20 seconds, but this is a very solid back tested number. The candles that still have enough time, 20 seconds, 30 seconds max, still have time to reject. So this candle could easily go from that to opened here and is now this. Does that make sense?
Yeah, it does. It visually makes sense actually as well when you finish drawing the candle. So it like opens up there, and then you, as you said, it has time to stop, and then turns red candle. It all it does make
Yes.
sense, and I do pay quite a bit of attention to not like 20 seconds, but where we are in terms of candle close, and I do try to keep a track on all time frames as well.
Awesome. So you watch the seconds on your tape.
Yeah, either that or usually like on Trade Zero chart, I have there's a countdown timer on at the side of the chart, basically, where the price is. So
Yes.
I either look at that or yeah, or look at the seconds and minutes on the time and sales or the printed.
Okay. But since your world lies in the realm of tape and level 2 for the next 6 months or however long it takes you to get comfortable, then I can only emphasize that you start looking at it only on the tape. Okay.
Mm.
The tape tells you the time. The tape tells you the color, the tape tells you the size, and the tape tells you the price transaction is happening at, right? So it's all that information is right there. You don't need to go looking at charts and all that. So it's like habits is hard to move away from doing one thing, but try to start. And if you're taking notes, this is a great note to take. Try to start moving towards where you're identifying the time of the candle, the level of the candle, and the whether it's algo or in the bid or above the bid or below the bid, all on tape. And it's going to take a while because your eyes are so used to glancing over at other things.
Yeah, and yeah, it's actually distracting, to be honest. So
Well, the more you take your eyes off in the crucial parts, right? Because price can be just, here all day, all day. You don't give a crap about the tape. I don't care about the tape. And then all of a sudden, finally, the parabolic move comes in. And the parabolic move says, okay, pay attention. Now my eyes are really big, right? And then I see that it pushes and it rejects. So here's the top of the candle or whatever, something like that. Now you're really engaged, right? Because now this is an area of interest for a short trader. And so now during this time is most important for you to not deviate your eyes from the tape and the level 2 at all, right? Not going over and glancing at a 5 minute or 10 minute anymore, because your pre-trade thesis is already in. If this thing goes parabolic X%, or if it goes into a level that I have pre-drawn, or if it goes into pre-market level, or if it goes into a level that I've agreed with my trading buddies, then I need to pay attention here. I need to focus on the tape and nothing else, right? And so the importance of this process of going from sleeping, that's closed eyes, to wide awake is an element that we have to fight. It's your most important capital resource, which is attention span. Okay. What do algos have that we don't have? Or vice versa? What do we have that algos don't have? Emotions, right? And so,
and tiredness.
exactly, because you're hyper focusing on the tape all the time. I'm not saying just you, I'm just generalizing. Because you're hyper focusing on the tape all the time instead of just focusing on it at key levels, that makes you tired and depletes your mental capital, which plays even more so to the scare tactics and games that the riggers algos use, because they don't have emotion. They don't get tired. It's a machine, right? They turn the switch on and it performs at the same effectiveness and rate as if they turned the switch off and then left it on for 3 days in a row. Make sense?
Yeah, totally.
So your most important asset is mental capital. Make sense?
Yeah, absolutely.
You have these moments of getting quiet on me. Is that just you processing or what?
Yeah. I'm just thinking, trying to put myself into, whatever you talk about, to put myself in those like shoes, or just remembering, like, the situations where you get exhausted and then you can't concentrate on things because you spend, was looking at all this and trying to find something to enter there when there's no need to actually enter there, when you only have to be looking here. And once it gets there, you're so tired and so distracted that you're looking between your montage and tape, and then, as I say, like, get hyper focused on what does candle do, where is it below there, and looking for levels actually on candles rather than on here, because this is moving so fast, like level 2 and tape. So it's like only hyper focused on candle to look, is it below or above a certain level that I'm interested in. But that's all because you exhausted yourself somewhere here, and then get more emotional once it gets there, and you're already like tired and like, oh wow, I'm too tired to be able to read this. It's too fast for me at that point. So then get hyper focused on this, looking just at the candle where it is. But yeah.
Okay. Yeah. So with those things that I just said, now you see the importance of why you knowing when and how to read the tape is so important.
Yeah, so it's not always, so you only have to do it at key levels. There's nothing else, unless,
But
which
okay,
is
but do you even, like, when you're looking at the tape, let's step out. So let's say that, and we're going to go right back to this concept in a second because we're not done here, but don't lose train of thought of that, because I need to solidify this a little more, right? The candle. But when you say, let's say this is a 5-minute chart now, okay? We're just looking at this one. And price action is chopping in a 5-minute range. To even go deeper into what you said and what I said about mental capital and algos, do you care what the tape is doing here?
not really. Maybe around like this level, bottom of the shelf.
Okay, why?
I would take a glance and try to see what's happening on a bid, if there's a hidden buyer. if there's someone really wants it higher, or they just, trading in a range until there's a fake breakout and stuff. So I'll watch as well. Same thing as for hidden seller. I would be looking for very small, like ones maybe, and as well a tape running opposite sides, so it's running red.
Okay. Slow
And
down,
yeah,
slow down. Okay, sorry to interrupt you, but you're going down a rabbit hole again. So what is most important of understanding at this level? You said hidden buyer. Okay.
yeah.
So we're gonna go from, let's see, gonna type to you now. I need you to dig into this concept. Motion versus prevention. Okay. Those are mindsets. There's YouTube videos, and I know Andreas has been talking about it, right? Because Andreas is real good about wanting to get his psychology in trading. And now, with Andreas, we're at a point where I'm just trying to make him simplify things because he overthinks everything. And now it's just a matter of, okay, you have enough information, now put it into action. Okay. But this concept, promote what you just said is a prevention mindset. Okay. So you said you're looking for a hidden buyer. Why do you care if there's a hidden buyer? Well, you do, because you don't want to get squeezed. But what's your strategy? Your strategy is to go short. So what are you looking for at this level? Well, you're trying to identify if the seller did this, right? Most important thing for you and me is to identify if the seller is active at this, because what's the seller going to do in order to clear and trap more longs? Well, he's going to sell here, and he's going to buy micro positions, right? He's not going to buy as much as he originally had, but he's going to sell here, and he's going to buy micro positions and keep moving the price up, right? And longs are getting in, longs are getting in, longs are getting in, and then you have a fake breakout. More longs got in, more longs got in, more longs got in. They were cleared out, and sayonara. Now they're all pissed and they're dumping their position, right? You're trying to avoid that, which you shouldn't be. You should be trying to anticipate this. So you're trying to avoid the clear out, meaning you don't want to be a part of the clear out because you've entered here and here and here, right? Because you said, I'm trying to identify a hidden buyer. That means that you already have the mindset that my average is too low. Theoretically, I don't know if this is true or not, but this happened to me, right? So everything that I will say to you in these nuances of concepts that could have happened is because I've experienced them, okay? And so I know that when I was low slamming too much size, I was looking for a hidden buyer because I was afraid of price going higher, where I shouldn't be low slamming, and instead I should be hitting the ask higher because I have anticipated and I saw that the seller was here. And now price action is going up, and I'm anticipating that this is a clear out in my favor.
Yeah. Yeah, this if I'm already, let's say, in here for a good reason and here, or even maybe like below this midline, then this watching at this level, as I say, like looking for a hidden buy or something, I think that would be for me just to adjust my risk. If I don't see that, I can probably keep my risk same. But if I see the hidden buyer or actual buying, like buying it back up, looking a little bit stronger, and so then would just adjusting my risk probably to try to just to break even or maybe like top of the shelf.
But if your average is small enough down here, like let's say I put an engagement order down here, if my average is small enough here, and I know that I want my average as close to this line as possible, then why would I be adjusting my risk? That sounds like trading on the fly. Like, why trade on the fly? You have a plan on how to trade, right? The plan is to only enter in this region or above, right? And then learn to pay attention to what tape is doing in this region, because that's where the major scare tactics are. But you've already got a position in this region. And then if this thing comes up and tests this level and I see a refreshing of any kind, I'm out. But I'm doing this on such small size, but I know my average is closest to here. So maybe you do 1 share, 5 shares, and your average, the point is your average needs to be as close to here. Then if they do this, since you've already risked, initially your risk was here, you don't care if they do this and go down, even though your average is in the shelf. Because the likelihood of your average always being above the shelf is not not reality. Just because you see these guys on Twitter who have these charts that,
Yeah.
is not necessarily a reality, right? I'm not going to talk about anybody in particular, but I can tell you that some of those guys that you're seeing on Twitter that I trade in rooms with, that's not the reality, is what they're posting on Twitter.
Mm.
So the exercise is going to be, once again, we're going back, right? We're going back. The exercise is the candle opens here. It pushes, it pushes, it pushes. And that's on a 1 minute chart. So we're going to delete that. It pushes, it pushes. Now there's 10 seconds, 15 seconds left. It's cleared out and it's still pushing. Do you take an entry?
No.
Okay. No, good. Easy enough. Now, if we're pushing, and we have 20, 25 seconds left, do you take an entry?
Yeah. Seeing the tape on level 2. Yeah.
Yeah. You want to see AAs, right? Inorganic, low volume. You've already defined the highest volume happen on this candle. You already defined the highest volume happen on this candle. Once again, like you said, it's contextual, right?
Yeah.
The highest volume. This one was I don't know, pretty well balanced to the seller side. So this is all red. And mostly red and about the same as the previous candle, or maybe even a little higher. And this is an indecision candle, right? So this candle, in reality, what it has done, it's compressed your shelf. Your shelf is actually now, the perfect shelf is actually now here to here. Okay, but don't worry about that. You focus on the primary shelf, which is the shelf created by the second candle. Okay, after high volume or the second candle, that is the high volume. Okay.
Okay.
If there's 20 seconds left, like you said, this comes down, it's coming down, coming down, coming down. You're in up here, and this thing comes down. And even though this thing closed green like that, you have a safe entry, right?
Yeah. If you got it somewhere here.
That's the practice. The practice is to get it somewhere in here. Even in here, you still have a safe entry. Even if you get it somewhere in here. Why? Because it's still a fake clear out of the high, right? The fact that it's here closing, sure, it makes you cautious, but just keep in mind that there's nuances of how that can go down. But ideally, what you're looking for is that this candle reverses and does this, and you're in up here somewhere above the shelf, right? So your A entry is top half of the shelf, this region here, and your A triple plus entry is getting in up here somewhere, anywhere up here. above the shelf. Okay. So that's going to make some regions for you to be more in tune with, instead of I need to just top tick the candle, top tick the candle, top tick the candle. So before you get it, you're even thinking of the trade as you're micro analyzing. You're saying, okay, now I have a region to trade for an A setup, and I have a region to trade for an A plus setup. So you've predefined your entry areas, which helps you predefine your risk.
Yeah. Yeah.
And it's really not that difficult. Like, okay, if you turn around and Monday try to trade full fledged and try to do this, it will be very difficult. But if you make this like a video game, right, where you're, I don't know, you're shooting at one target, and the only thing you're practicing is this one exercise, and you don't care because you're using one share, you're in simulation mode, you're just creating muscle memory, right? Just like Kobe Bryant did or Michael Jordan did for being able to shoot free throws with his eyes closed, right? It was muscle memory.
Yeah.
Okay. So this is a very valuable exercise.
But we talking as well, just like, to be specific, we're talking about as well, it's contextual in terms that we need to see, I'll just say, confirmation of a backside sort of thing. You see a move, exhaustion move or something where you think, okay, this should be done, and it's doing a shelf, and then which is you're expecting a clear out. But prior this you need to see something contextually that tells you, okay, that's it, we found our level, this thing should be done. And then you look at this entry getting, with 20 seconds left or so, top half of the shelf or above. It's not just like any random, or I see, some sort of shelf, and then I'll start taking those entries.
No, of course not. But don't go overthinking it and thinking that, that like the concern here is not your reward, right? It's not, this isn't about, okay, I had an RVR of, I made an RVR of 5 or 10R, whatever, right? Because what you're practicing here is just the entry. Sure, you're not going to go try this on the open of AMD. I get that. Yeah, contextually, yeah, you're going to stick to the tickers that you think fall within your macro criteria. But at the same time, I don't want you to go in there thinking that, the whole context of the trade. Like I
No.
want to see this fade to $2. Like this is not you trading. This is you doing an exercise.
Okay.
Okay. And
Okay.
it's for muscle memory. And it's very specific. The reason I'm making it very specific to one entry style is because I want to see your discipline at work, right? There's ulterior motives as to why. What did I say, right? The candle has to open up here, right? That's the most important thing. If you send me a bunch of charts where you're top ticking and the candle opened down here, then you're not really effectively doing the exercise that we talked about.
Mm.
Right? The candle needs to open up in this half, preferably even, either at the top quarter of it or even with the other candle, right? But basically you just want it to open in the upper half. And you want to see it clear out on AA orders, and you want to take the entry. Just take it. Right? Because you've already seen, like you said, contextually, you've already seen the volume come in, or you'd already seen the volume come in. Yeah, I'm not asking you to short the first parabolic candle. We want to, the confirmation is that the shelf was created. What do most shelves do? They fail, right?
Yeah. On at
Okay.
least on small caps, probably. Yeah.
Okay. But also, just because a shelf fails and doesn't follow through, the shelf still failed. Does that make sense?
Can you repeat that? If it fails but no follow through,
Yeah.
or
The shelf still failed. Until what? Until it confirms that it's pushing higher, right? So let me explain that. Okay, so and we need to jump into the tape, like viewing tapes and looking at all this on tape.
This thing that it actually, like, I was looking at it and it does make sense in terms that you want it open here on a candle, because it's could say like something that notice as well. The candles, like, if you look at them, they all end up like this most of the time, sort of even. So if it opens there, basically, yeah, it's more or less it should be failing. So if I get this, of course, if it opens here, you very rarely see that that's only on the weakness that it's gonna close red. If you enter here, if it opens here, and actually, yeah, if it opens here, so for it to be red, you sort of, it has to do this on a total weakness. But if you enter here, there's more chances of, yeah, it closing something like this rather than open here and closing like this. So this, I mean, it does make sense, this exercise, in terms of how to get the better timing, yeah. Because if it opens somewhere here, it can just do like still inside bars or whatever.
So
Keep
what is
running
this? What is this candle?
This one,
Yeah.
indecision.
Okay. What does that tell you? Regardless of the volume, there's no volume for a reason. What's an indecision candle?
It doesn't know where it's gonna go.
It's equality, right? There's still a fight.
Yeah.
There's still a fight. So if the candle opens here, the next candle, right? Well, it can't because it closed here. But let's say this closed red, right? This closed red. That's not red, that's red. This closed red, and the next candle opened here.
It still can go both ways.
Right, so why short that? No point,
Yeah.
right?
Yeah.
Your better risk reward is up here, right? What's one of the main things that we say? Let the trade come to you, right? Let the
Yeah.
trade come to you. What is like, is your risk reward okay? What, you're worried about missing the trade? Yeah, well, who cares? There's thousands of trades every day. The unfortunately, the habit that we fall into is that we start low slamming, and then once you become a low slammer, it's hard to unbecome a low slammer, right? And that's what I'm trying to show you. And I don't know if you're perpetually a low slammer or not, but
I have my days.
okay, well, I'm sure you do, and I do as well, and we all have. But the exercise, the second portion of these exercises now, if you take an entry here, immediately exit, no matter where the ticker goes. Okay. As soon as you low slam an entry relative to our new rule, our exercise, as soon as you have an entry below this line, unless you just got poorly filled and you got in poorly filled right here, right? You make the decision. But if you're trading black and white rules for an exercise, if you get any kind of entry in this region, cut it. Just cut it. And if the trade goes without you, that's okay. The exercise is not concerned with how much you're going to make off of 1 share, 2 shares, 5 shares. The exercise is how effectively can you be at taking your entry here, here, and possibly here. Does that make sense?
Yeah. Kind of, yeah, you need to force your mind to actually cut it if it doesn't fit your entry, which it's a good exercise in terms that a lot of the time whenever you low slam and I sit there, it's just draining.
Right, exactly.
You sit with a crappy average somewhere here, and even if it fails, and then you sit there and probably I just got lucky rather than, you know, I had a good entry. It's more to do with luck than skill.
Why are you here? Are you here to gamble? No, you're here to be a good trader and make sure that the odds are in your favor, right? So yeah, why even bother with that trade? Why burn that mental capital And then the next candle comes up and it gives you that entry, right? This candle opens here, closes here, and then the next candle does exactly what you wanted it to. And you're tired because you're getting out up here because your entry is here when it didn't have to be. Right? And if you miss it, and this doesn't happen, and this next candle opens, opens here and immediately rejects, then so be it. So be it. You're wanting to look for what you're wanting to look for. And I think those are the two components that will improve the ability to enter a trade, is the exercise of enter only if the candle opens up here. And if you enter anything down here, just cut it immediately, cut it. Oh, should I low slam? Cut it. And the pain is that you're going to be paying ECN fees, right?
Mm.
And after you see that you go one day where you're just cutting, right? Go back and analyze your expense report, and you're going to be pissed off at yourself because you're slamming and cutting, slamming and cutting, slamming and cutting. And hopefully that'll hurt enough to where you're going to say, okay, I'm getting it up here. I'm getting it up here.
Yeah.
So 2 parts of the exercise, right? 20 seconds, 25 seconds, candle opens here, it pushes up, you get in, and then it rejects. Or if I get in low slamming, I immediately exit the trade. Fair?
Yeah.
Okay, let's watch some tape. All right, let's see. Evoke here. Let's go back to right there. Let's watch this component here real quick. Oh, that was it. Okay. All right. Well, 9:30. Okay. So first thing, what do we see? We've seen a move, right? We've already seen a big volume rejection, right? We see that it reclaimed everything, grinded back up, came back into the liquidity, rejected again close to the highest volume, and now it's tracking down. So what are we not doing if we're drawing a shelf based on one of these 2 candles?
What we not doing?
Yeah. We're not getting in, right?
Oh yeah, yeah, not yeah. We want to see a push higher.
Right. So can you see this or no? Does it draw this line?
Yeah, it does.
On a video? Okay.
Yeah.
So that's our shelf right now is that big. And because we don't know what price action is going to do, because it's 9:30 and a lot more volume is going to come in. So we don't want to touch anything below this midline, right?
Yeah.
Okay. So let's see. So I got to close that big pen. Push play. It moves everything, but you get the point. It's
Yeah.
you know where the shelf is. Okay, sellers in 340. How can I say that the seller's in? Well, because of these 2 candles here, right? High volume, high volume. Sellers in 340. That's my first assumption. Now I want something higher. I want something above 355, 360. Okay. The first attempt could be over this mini shelf at 350, but I'm pretty confident in my trading that if it comes to here, based on where it's come from, $4, I don't want it because it's probably going to stop out around $3 and then make a push back into this 350. So my confirmed trade for this, right? If I really want to take the trade from here down, why take it at the open when I don't know what it's going to do? Why not go, let it go here, come back, retest, and then take that trade? Make sense?
Yeah.
So just being selective. So in this case, I only want this trade right now
Above 360.
above right into 360 or above 360, right? Okay, so let's play it. But as far as I know right now, the seller's in at 340. He's chipping away at 340. Okay. Speed it up a little so we can get through more tapes. 1.25 speed. Okay. There's the seller again, selling 340. Okay. Okay, so confirm 340 is selling. Great. Now I want to see big pops above 340 because I know that I'm at least going to get 340. Okay, great. There's seller engaging even lower, washing. If we see that out of the opening candle and we miss it, so be it. Just wait for it to come back because it's a small cap. It's going to come back. All right, there's the reclaim, right? But what is this? To me, this confirms to me that there's a seller in the tape, even if it reclaims. And there's the seller slamming those lows again. Right, but look, exchanging. Okay, there's the big push, right? So now we see, I think the seller is still there. Sure, we had a big reclaim, but the seller was at optimal positions in up here, right? So these low slams, yeah, they're trapping shorts, but I still think the seller is in down here. Like he's active down here. Okay. So what did we see there? We just saw a big trap, right? You agree?
The short trap, bear trap at
Yeah.
the open. Yeah,
Yeah.
yeah.
Above ask orders, green tape coming in. There's the seller. There's the big wash, washes down to 34. Speed it up past that a little bit. 39. Okay. And now you have a bunch of longs getting out from here, right? And a bunch of shorts slamming in, right? So all these longs, pre-market longs just got washed out. All that liquidity was absorbed by the rigor, and all these shorts are getting in as well. And then this thing's going to fire up, right? There you go. There it goes. Big inorganic push. Okay. Now what are we looking for? Well, the first thing we're looking for is the time. Okay. So we're looking at the new candle is about to, this first candle is about to close. So this is a perfect example of a reverse washout. Let's look at that again. This is the concept that I was just showing you on the white pad. How much time is left?
Just under 20.
Okay. Watch how fast this happens. Okay. New candle. Is that the lows? 12 seconds. 15 seconds, 16 seconds, 17 seconds, 18 seconds, 20 seconds. Slam 30. 30 seconds left. Still washing. Would you look at that? 20 seconds left now, and look at the reclaim. All the way up. Basically at the 40-second mark, right?
Yeah, yeah. It's
Okay.
so it's basically same concept, but on the reverse side, isn't it?
Yeah, absolutely. And I did not cherry pick this, that's coincidence. I did not cherry pick this tape. I had this open from like 3 weeks ago, and it showed us that concept. Because Andres and I this morning, we were looking at his tapes, at his recordings. And there it goes, right? Exactly what I said, the 20-second thing. Okay, now we know that we're above. Look at the rejection above 350. Algo is engaging, speed of the tape, but we want this to go higher with that kind of reclaim. Okay, what did I say the seller is? 340, right?
Yeah.
He's confirming that he's still there. There's the inorganic push with the purple. Seller comes in, slams it down. So still distributing shares, in my opinion, until he's not. Like this could go higher, but I think he's still distributing shares in the grand scheme of things. No, not distributing anymore. It distributed. Okay, now we're going to get through all this. And then I'll start showing some caveats. Okay. Right here, we're going to watch. There it was. Damn it, that was fast. Thought I slowed it down. Okay, 327 is showing what? An offer trap. Where are we? At the lows. So what is that really? It's not an offer trap. That's liquidity ready to be taken out, right? Okay, so let's see where that prints on the tape. Did I slow it down or no? Yeah, 0.75. Let's see where that prints on the tape. Okay, inside. Right, was that the print? Yeah, 326, 325. So it printed inside. So the algo just exchanged his own liquidity.
Okay.
Right. And now it's going to push higher. So why are they creating that false ask? To entice buyers to get in above that, right? With a market order. Is there an actual bid prop? No. Could there be a hidden buyer right now? Most definitely. But there's the seller engaging again, right? So that was a trap, a true offer trap. Okay. And what told us that that was possibly a true offer trap? Well, it was the sells at 340 that we talked about earlier. Sorry, I went too far. Right? The sells at 340 that we talked about earlier. Watch how that 340 walks down to 330, 335. I'll pause it right when he does it. There's the seller, there's the slam. You saw that printing 340 on the bid, those those bids.
Printing on a tape?
No, on the montage.
I missed it.
Okay, let's watch it again. Okay, so the reason I want your setup to be, yeah, I'll just draw it on here, is tape over here. So montage, so tape. A la chingada. Let's use this one. Tape, right? Montage and chart. Okay. Why is that? Because your eyes are here. This is your first focus. Your peripheral vision is here. This is your glancing. And this, your chart, well, this is like a 6 or a 7. Why? Because this is 1, 2, and 3 focus. And this is 2, 3, 4, 5 focus. And this is 6. Is my point getting across?
Yeah, because well, you get all the info on these two anyways.
Yeah, I want you
But-
focusing here, 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 glancing here, focusing here, 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 glancing here, focusing here, here, glancing here, glancing here, focusing here, here, glancing here, focusing, glancing here, focus, glance, focus, 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 glance, glance, focus, focus. Okay, so you rarely come back to this is the point.
Yeah.
You rarely come back to this. The most important thing is your montage, and second is your tape, and you're not staring at your tape all the time. Okay, so we have it a little twisted here, but I like the way he sets this up because it makes you work for what you're looking for. So the reason being, okay, I want you focusing on the montage only. Don't look at the tape, okay? Focus on the montage only and listen to what I say, okay? Meaning listen to how I walk through the tape. Make sense?
Yeah, yeah.
Focus here only. Focus here, glance here, look at the time, focus here, glance here, right? For the color and time. All right, so you have a big exchange at 30. You know the seller's sitting at 340, okay? Why? Because look at all this selling action on the bid, okay? 334 is bid prop, 333, there it is, bid prop again. Chewed through it, slammed down it. Okay, and at the same time, there's a little more bid prop. What's the offer doing? Walking down, right? The offer came down 34. Okay, what happened there was that complete reclaim, right? But we're expecting that. We want to trade above the 350. So now we don't care what happens, but now we're engaged because it's above 350. So what are we looking for? Okay, we got an equal exchange and there's no stacking on either side. No dice, no trade. Okay. We still know that there's a seller at 40 and he's showing himself again higher, right? So what is this telling me? He's just distributing at a higher price, selling shares at a higher price, and that's good for him, but it's all selling, right? But price is going up, but it's all selling. That's a good sign. Okay. There's the stack and offer, so nothing, right? We're in no man's land. We've got equal stack. We've got an equal offer trap to an equal bid prop. Okay. Now we're starting to see, where did we say we had interest? Above 350. Well, what happens above 350? We have an offer trap, but no bid stack. Then the offer trap was a wall, rejected, right? What did we see come in there at 341? A 0.
Yeah, I think there was on both sides as well.
Okay, on both sides. So what does that tell you?
No trade.
But it also tells you that the seller is still engaged. Okay, if you're already biased that the seller is sitting at 340 and he starts putting in zeros higher, it's like you were saying earlier above the shelf. What's he doing? It's a hidden seller, right?
Yeah.
So because you have identified that there's a seller at 340, everything in your mind is that there is a seller in the tape until you're proved otherwise. Okay. Does that make sense? Like your mindset should be that this is selling until it's proven that it's not selling.
Okay, yeah.
Does that make sense? Like I'm trying to twist your mind to thinking opposite of what you're thinking, right? Because right now what the chart is telling you is, okay, there's a reclaim, there's a buyer in the tape, and this thing's going much higher, right?
Yeah, yeah. It does make sense because yeah, you'd think like, okay, this is like a bear trap, and now it's gonna go all the way here to squeeze everyone out, basically. What the chart is telling. What I would be thinking, like, okay, they washed out, trap lows, landing shorts that enter, you know, on a breakdown, that wait for that breakdown. So they got, yeah, entries here, chase all this, and then it's gonna reclaim and push all the way there. That's what I would be thinking looking at the chart. But as you say, you identify on the tape the selling at like 340s, and until you're proven wrong, they're still selling in 40s.
I'm almost positive that if we look at my whatchamacallit, my TOS delta candles, I bet you this is primarily a red candle. When was this? Oh, it's too old, 6:15. I bet you this is primarily a red candle. But, and you have that indicator, right? Or I'll need to share it with you for your TOS.
Bob probably don't have it.
This one here, the killer volume.
No.
Okay, which shows you the delta of the volume, right? Like how much was buying and how much was selling.
No, I only have red and green candles. Doesn't show the delta. Yeah.
Okay, so I need to give you that. I'll give you that. Yeah, so I can almost guarantee you that just by looking at the tape that this candle was red. And that's the other reason we need to get away from looking at the TZ chart, because you're much better equipped with a good tool if you have this indicator, so that you can identify the primary amount in each candle, like who is dominating the candle. And
Yeah,
here, I know that this, after this price action right here, that it's going to reverse. Sure, it didn't reverse for very long, but I knew it was going to reverse because this is capitulation volume. When you have this much only red volume in a move, they're capitulating. In fact, they're wanting to sell it off because they're already in here and now they're playing off the support. They're all these chasers that got in here for the long, and here he's just taking their liquidity right here, right, to push it up again. And sure, this thing didn't continue to go up because this was a pretty deadly candle, but this right here is capitulation volume. And sure enough, there's a reversal. Not very great example because it's only pushing 20 cents, but it is capitulation, right? Solid red goes up. Big red here, look at that. Big red here, reclaim candle, another capitulation goes up, right? Capitulation goes up. Make sense?
Yeah, so it's as well, it's like reverse for stuffs and, you know, exhaustion into high. So, but from reverse side.
Yeah, so the full reds, capitulation means exhaust, like give up. Okay, so that'll help when you're watching tape, is if you have the indicator from TOS on the side as well. Like when you record your screens, it's better to have the TOS charts with the tape and montage from your TZ than it is to have your TZ chart up. Okay.
Yep.
All right. So where are we? Let's see. 350. There's the offer trap, 350, but it's not high enough for us, right? We know that is likely to clear out shorts, like you said, halfway into this move or higher. So let's see if it goes to get them. Okay. The seller engages 348. Then there's a push. Now let's watch the time here. Okay. There's 18 seconds into this candle and we're already getting purple orders, right? So what is that? If we're at a midline like this, those purple orders and your candle is immediately after a reclaim candle, we can assume that this is going into the 60s, right? But let's see, Because to me, there's a seller at 340. So let's see what happens. Okay, so they trapped. They trap short. They drop the bid real quickly down to 30s. Look at this. Oh, into the low 40s. I thought I saw 38, 37. So low 40s and then right back up into the 50s. There's the seller hitting algo seller sitting. Look at that. That's just straight iceberg order, right?
That's below, isn't it? Below the bid.
Below the bid iceberg order. Yeah. So that tells me this thing is about to go higher. I don't know where this went. I forgot. Okay, so I was wrong. That was the seller actually engaging. Okay. No, I was right. It's going higher. Now, why? Why do I see that below the bid is going higher after that kind of candle? Well, it's really because of the price action that happened just ahead of that, where I said that the algo, that iceberg was on algo, on a wash.
And that was because the price was like this.
Also because it was in a value zone. By what I mean by value zone is that he bought below the bid. Went down and filled below the bid, right? So
Okay.
it's value. Like who can fill below the bid as a long in this?
No one, algos. Only algos probably, no?
Yeah, and why did we? There were two things that determined there was an algo. You saw one of them. What was the other one?
The price and the other one, not sure.
It was all hundreds. It was identical to this. It was like very odd numbers, and then it's just 100, 100, 100, 100 after another. Right. So it was an iceberg. They were unloading, 30,000 shares in little, or, millions of shares in little 100-lot increments.
Okay.
Make sense? Let's see if we can. Oh, why did I always go too far? Oh, it's because it's 5-second. There's a sell. Do we miss it? No, not yet. Here it comes. Right there. See that? 100, 100, 100, 100, 100, 100. And it's all those decimals. That's an algo reclaim. Okay. So now price is going to push up because there's an algo reclaim there. There's the selling. There's that wash into the 37s that I did see. I thought I was crazy. And then the entire reclaim. But look where was the reclaim from the algo earlier?
Somewhere at 40s.
348 and change. And where did they wash it all the way to? 337, 10 cents. Right? So total spook, but you identified it because you saw the algo on the tape. Okay, that's one of the things you want to get to. So you want to stop when you see things like this as you're watching hundreds of hours of tape. That's what you're going to look for, little things like that tell you, okay, that's actually a reversal signal. Why? Because the previous candle did a full-on reclaim. I still think there's a seller at 340, but if they're going to reclaim like that, they're going to go take out some of these people and push the price higher. But I still want to know where my seller sits, right? So my seller's moved up to the 50s. Okay. There's the seller again, big exchange. Algo kicks in again. Okay, so now let's focus back on you're watching the montage, right?
Yeah.
Okay. You're watching the montage. Okay, there's the offer stack. There's the bigger stack. Now what do we see different than earlier? There's no bid prop. And the bid prop is what? It's got a large spread. So if you avoid this number, we got 3 cents between the bid prop and the offer trap. That tells me that they're trying to trap right now. Okay. Let's see. There's the dump, right? With the market orders to save it. There's the dump. There's the reclaim, push higher. Oh, I went too far. Okay, so let's go to the next instance.
So would you say this would be a viable entry over here? If you would take this like top of the range, bottom of the range, mid of the range, and then if there's a seller, as you say, and you get entry, and I do believe the timing was kind of right. I think it did this push up and there was, I think, like 30 seconds or something, I think, on the candle left. And it did open, well, it didn't open second top above mid range though. So I don't know, would you consider this as an entry? Or entry only in this area?
I'm listening to you and I'm letting you comment for the video for your own sake and because you're saying important things. And so I want you to talk your way through this.
So yeah, because
What are the,
ideally we identified as in being this level 340, 380, mid-range 360, and we would want an entry between here and there. But this gives like a range as well, mid-range.
okay, so
what it does act to this.
Yeah, I think it's perfect. I think it's a perfect understanding of what we're talking about, right? You made a very strong change on the fly. The only thing that I would caution you here is what your size is going to be, right? Because if this does go into the 380s, how much do you have on and it's low slam? But I think what you just said, because we identified, you said it yourself, you identified the seller is at 340, right? In this candle. Everything above 350, we saw the purple tape was coming in. It closed below the midline of the shelf, right? And so now the next candle opened where?
Yeah, it's still under mid.
At the highs, right?
But
no, on your micro, that's not. You made a change. You said the shelf went from this to this. So this area is not even your shelf right now.
Well, yeah.
You changed your thesis, which I'm okay with. I prefer you not do it in the beginning as far as taking your entries. But remember, your entry exercise is just an exercise in entry, right? So it's a process of defining your parameters, which is your upper and lower boundary and your midline. So I think you made an excellent change on the fly there. You recognize the seller. You saw that the next candle opened high. You saw the inorganic price action. And then you got in for the sell-off. And then you already know that the seller is at 340. So now you have an opportunity to do what? When this 340 gets tested again, you add, and now you're off to the races. So now you have an entry here and an entry here. Whereas if you just slammed in your giant size here and this thing came up, you're fucked. You got to get out, right? Because your average is supposed to be up here. But by dividing your bullets out and getting in here, maybe taking a quarter off here or whatever, and then adding it all back here, because your 340 is your level. You know that's a rejection level. You said you identified that the seller was there. Now you're trying to get that $3 move, right?
Yeah.
So
But then at the same time, what I meant, like, if I would be looking at entry here, my original risk probably would be this. I wouldn't be risking this. In just in terms of if I change my plan, so I had a shelf there, and was looking ideally entry between these areas. But if I change my plan to this, uh, and see the weakness, the seller on the tape, and the weakness on it, the inorganic action and rejection of that level, I would be that would be my risk.
okay, so
Or maybe this high, I would be playing it with a risk based of this more or less, and the
okay,
weakness.
okay, so let's do an exercise. So you'll hear it on this video later. So what you're going to do is you're going to, and obviously the pattern doesn't have to be identical, but you're going to take note of 10, 20 trades, whatever, of where you changed your initial risk at high a day or pre-market high a day, where you changed it to a lower level, and see how many times of those 10 trades that method was successful, or how many times you got stopped out above the macro midline.
Mm,
Okay. So you need to back test that, right? Because
yeah,
what you might find out is, okay, yeah, on the fly, I came up with a nice little thesis and said, okay, this is my shelf now. My risk is here. And I got in, at the top of my shelf, A++. I passed all, but my original shelf was going all the way up to this level, pre-market high. And ultimately, 7 out of 10 times you got stopped out when you changed your thesis on the
mm,
fly, right? So that's just something that you got to go back and take statistics on, take notes on, and that's back testing. It doesn't have to be fancy. It can be a piece of paper, or it can be an Excel spreadsheet, but it doesn't have to be fancy. Like, back testing doesn't mean that that you've got 900 lines of data.
yeah,
This is back testing right here. You have a theory that you think that if this shows me what I want it to show me, that I can cut my shelf in half and I can cut my risk in half and still use the same size as I would up here, and see how many times that trade is successful. If you can guarantee that, if you can show that that trade is successful more than 7 times, then you have a viable strategy.
yeah, makes sense. Yeah.
Make sense? Okay. All right. So everything I've said so far, like I said, I would be honest with you. I hadn't watched this tape before. There's the fail and reclaim. Okay. So now everything's gotten compressed. Oh yeah, because it hit the bottom. There's the fail. And the reclaim. Okay. So there's the trickle. Now let's watch this clear out here. So okay, it's pushing. We're still below our 340 level. It's tested there once, right? Volume is decrementing. Now they closed below. This candle open high. We're barely into the start of the candle. So there's the wash. Washing, selling 330, 325. Okay, we've got an offer stack. So I want to see it rip through that offer stack. So I want an entry in 341, 342-ish. Okay, let's see if it gives it to us. Okay, offer is it. So there's my offer at 338. I'm looking further down. Right now, I don't see any bid propping. So I think this is going higher. Into
Zero on a bid.
in the 40s, 0 on the bid, 0 on the ask. That's a seller. In my opinion, that's a seller on the bid. There he is again. Okay, there's his bid prop to entice price to go up, moving the bid prop up. Okay, still a bid prop dominating, bid prop dominating. Okay, there's the inorganic price action. I'm glancing over here, seeing purple. Okay, there's the sell of that cluster. There's a big bid prop again. Okay, so now we know the seller is down at 330. He's no longer at 340. He's down at 330. So let's see if we get an inorganic push. There's the bid prop. That bid prop is a sell. In my opinion, that's a seller. There's the inorganic price action. Tries to go into 340s and rejected. Right? It's not rejecting much, but we're just watching concepts of tape. And then there's the big rejection down to $10. And how much time was left when they did that?
This one was, I think, still over 30 seconds, I believe.
And why? Why would you think they would do that? I'm just curious.
I don't know, maybe because everyone was waiting to get 340 or above.
Yeah, and also look at the amount of accumulation we have here, right? Whether it's distribution or there's a lot of longs going in here as well. Right?
So with all the, because it had on a bid, I think there was 150 or something on a bid, kept flashing.
Yeah.
So I suppose on each of those, in how I would imagine is just literally he puts the size on a bid 150 at bottom of the shelf or range, and then the long buyers start printing on a small tape, like retail traders or something with a small size, trying to go along, prop it up a little bit. But I
So
think just
where do they have to go long? Above what price? Above that 150, right?
150, no, 3.
Above that 150 stack.
Oh, yeah.
So they have to chase the market or chase the ask.
Yeah.
So that's why it's a bid prop. You recognize that. Okay, good. That's exactly why. And that's why they held it and then they flushed it with
Well,
enough.
I suppose it just wasn't enough volume. Whatever they did the bid prop, they were just not enough buyers coming through. So I suppose he just released it here because for him to make it go higher, there was not enough probably participation from retail. You just couldn't create the breakout, so you just released it.
No, I think what's happening here is you have a bunch of buyers over here. You have a bunch of buyers over here and they're adding here. Because that's not too bad, right? They're adding into, and then here he rejected all the new liquidity, the oversized liquidity, and then here they started panicking.
Hmm.
You see what I see?
Yeah, probably. Yeah, on the higher time frame, I suppose this was still happening more like a dip.
Yeah, exactly.
If that's the level, so it saw dips on a higher time frame, it still looks like a bear trap sort of say. If you look whatever, like 15-minute or 30 minutes, that's probably candle opening here, and it's got like wick down, and it's made like a reclaim and just trading somewhere there, and everyone's, as you say, like, yeah, probably adding to their positions.
Well, that's what I was thinking about. Look at this 15-minute candle here, closed up high. This 15-minute candle, sorry, this 10-minute candle here stayed pretty dead even up there. Then the next candle dipped. We got a little push into 9 o'clock on this 15-minute, right? And then the next 30-minute candles was a total pullback, right? And so this is on the hourly chart. This is a nice little pullback back to the 50% in here. So
on a higher time frame.
Yeah,
Yeah.
exactly. So that's where I was thinking that too from the higher time frame. And now they're going to flush into as close to 3 as they can. there's the offer walking down, walk down 312, was up at 320, 315, right? There's the offer
That's
stacking more. Now you have the bid coming in. So I think they're about to try to clear out the wash and then bring it back up again to the 1520s. Okay, there's the offer. There's the inorganic price action coming in. Okay, 308's holding. Starting to get the longs coming in. There's the push. Inorganic push, trap as many as you can. Okay, there's a bigger bid prop. So this thing's selling on the 315 now. There's the wash, the exchange. Okay, now it's holding these lows. And there's the attempt to bring it above 310. Okay, so seller's sitting at 310, 312 now, and there he clears it out. Right? It's not going very far, but the seller is sitting there. And why isn't it going very far? Well, because it's already gone down from 360 or 355, right? And we're at a psychological number. We're not necessarily defining here how to see a trade. We're just defining how to read the tape. Okay.
Yeah.
So don't think just because I see that I say they wash out in a little tiny candle microstructure that it's not a valid read. Okay. Make sense?
Yeah.
The seller is at 310. But in the grand scheme of things, we're at a 50% retracement already. And they're going to wash. The more they hold it here in the 304, 305, 306, 308 area, the more likely they're going to wash the $3 because you're getting more longs getting in right here, thinking $3 is going to hold. And essentially at this point, 945, if they don't start creating a demand shelf, even for the whales, the bigger players, this thing's just going to all day fade, right? So, okay, we saw that clear out.
By the mind shelf, you mean something like, so does this side consolidation and then make a push and settle on top of it? As a demand shelf, you would say like this type consolidation and then break out of it with a little bit more volume and settle above it.
I mainly mean that if they let this thing go down too far, that it's less likely to recover.
Oh yeah, okay, yeah.
Right? In the grand scheme of things, on the larger time frame, if this thing just continues to fade, you get less interest because they'll bring in another ticker. So if at the open, right, this is essentially your demand shelf built off of this push here, right? Essentially what's happening here is if they allow this thing to go too deep down here, then the longs are going to lose interest. So they're going to hold this psychological level, create their demand shelf, meaning not allow price to fall below a certain price, right? And then push it up however far they're able to push it up. So I don't necessarily, I still don't see a buyer in the tape, but what I'm seeing now is that the seller is not really letting the price go. He's not removing the floor. Right? Not yet anyway. And so I want to see if they can test the 325, 340 area. Right? And so what I'm seeing, what I keep seeing at the 310, 312 is that the offer trap and the bid prop are very equal. Like one of them will take over for a second and then they'll put in the shares here. Like the price will get slammed and they'll put in the shares here. The price will pop and they'll put in the shares here. So they're just playing tennis right now. Make sense?
Yeah. So it's going
just watch here.
Either way, yeah.
Just watch here. Just bid prop, offer stack. Prop comes back in, offer didn't move. still stacked. Printing red. There's the offer. I mean, the bid prop still increased it one more level below. That's not moving. Okay, there's a big bid prop. Price is not really moving, right? 2 cents up. So yeah, this is where you have to think of, and we need to move on to another tape, but this is where you have to think of, okay, real buyers do not show their size. So if those bids are showing up and the price isn't moving up, then one of two things is happening. That's just a seller getting rid of his shares, or they're just going to hold this level on no volume until they have enough accumulated short slammers to push it to the next level, or they're going to trap enough longs to release the floor, which I personally think that this is going to release the floor. Let's see. And boy, was I wrong, right? This thing went higher. Either way, I wouldn't take this lower level trade, but this thing went higher. This thing pushed up, right? Right into the levels we talked about, 340, 350. Yeah. And so, yeah, I was saying that I think this is going lower, you know, when it was back here, like 4 candles. But once I see 10 minutes of that, you bet your, I mean, there's 5 minutes. There's 10 minutes of it. You bet your bottom dollar. And look at, I see a tightening structure here. I mean, this is exactly the long I took on AMTD that day that it washed out. Tightening structure. There's a nice washout. I guarantee if we look at this candle right here on the delta and this candle right here on the delta, those are capitulation candles. And so then here's the little quick washout and boom, gone. How do you see that on the tape? Well, I'm not going to show you how to see longs on the tape right now because it just confuse you with too much information. Let's pull up another tape and look at these my subscriptions.
Alonso?
Oh yeah, thank you. Alonso. Okay. Let's look at some nasty tape. I don't want to look at opens too much. Okay. Let's get this to the highs. Okay, so look at here. Okay, so this is a great idea for a setup here, right? So look, first let's look at this candle right here. See that candle?
Yeah.
Indecision, huge volume, right?
Yeah.
Okay. But what happened on the previous candle? Big push, right? So seller engaged. So what's typically been happening these days is we see is multi-level moves, right? We'll see this, and then it'll do this, it'll wash, and then they'll reclaim, go to the next level, clear out, and then it'll either fade or it'll come down and basically touch this region and it'll do one more. So more than, if you get more than 3 legs, like if on this third leg of the move, the volume isn't decrementing overall, like getting lower than it was here, then avoid, right? Because 3 legs is kind of the max for small caps. 1 leg, 2 leg, 3 leg. Okay. And this is actually, in my book, it's only 2 legs with a macro clear out, this being the macro clear out. Okay. So what I'm getting at here by looking at this tape, what I'm trying to get to here is that you see this indecision candle with big volume. this to me is going to be exhaustive volume because they have put in the biggest volume of the day into this resistance and they weren't able to overcome the resistance. And on top of that, it's already after 9:30, right? They did that in the pre-market. So now I think the seller is somewhere in this 350 region. They're going to clear out a little higher and then take it lower. Okay. That's not to say that it might not reclaim and go higher again, but you've already seen this, that it rejects. So watch the clear out, which we already seen. Okay. So watching again, you're watching here. You're not watching here. Not watching here at all. Okay. So there's even Steven, right? There's the bid prop. Look what we got here.
0 on
Okay.
alpha.
0. So what does that mean to me? I think there's a hidden seller, but I don't think this thing's ready to capitulate. So let's see. I think they're still moving because look, you still have liquidity at 65, 64, 63, but it's struggling to get above the pre-market level. So anywhere close to anywhere above 360, I'm comfortable taking a piece. Okay. There was the push and wash, and there's the wash, and down below, there's the offer stack. Okay. So this is more indicative of a true offer trap. Okay. It's a stack right now, but since it's a highly manipulated ticker, I'm expecting it to go above this and reject first. Right. And I know that based on my learnings from how I visualized it on Bookmap. Right.
So isn't it like there was an offer trap at 360 before? Not a big stack. So it broke past it, came down, and that's when they slapped 200 something, double triple. So wouldn't that be as a indication to actually go short?
Yes,
Once
that's what I'm saying.
Once it's below, yeah, so it's below 360 because it pushed past, came down, and they slapped the offer trap on top.
Yeah, but my indication to take it above, to take the trade above 360 was the 0 on the ask. Remember that 0 on the ask?
Yeah. Oh yeah.
That's a hidden seller in my opinion, with liquidity above it, right? He didn't want to show his hand yet because they hadn't slammed, and the 0 came in, and that's what caused the price to reject hard. Because if we look on the tape, I bet you, I didn't look at it, but I bet you there was a big, yeah, look, 1200 and 299. There was a big sell order at 360. Was that before? Yeah, that was at 360. Let's find it. $360 is decrementing. 361. There's the, you saw that 0?
Yeah, it's 61, yeah.
Okay. Now let's watch how much more fills. So let's watch the tape this time. Once it pops above, there's a 0, pops above 13. They've filled below. So they filled that on the bid. The algo filled that on the bid. Okay. So that's telling me that's confirming the seller. No, I'm looking at this, but yeah, you have a good eye there. But I'm looking at this. When the offer trap of 13 was on 360, there was a double stack of 13. Some of this fill was right here by the algo on the bid. If this thing's going higher, why are they filling on the bid? Right?
Yeah, it doesn't make, well,
If this thing's going higher, why is it filling on the bid? It's not pulling back. Does it look like it's pulling back right now?
no, not really.
No, it's going up. And how are you filling on the bid going up? We're not. The algo is. Anything the algo does, I think, is manipulation. So I think the opposite. We're at the highs. We struggled twice already, two 1-minute candles to get above pre-market high. And you've seen the seller come in at 360. Okay, there's the stack again, a little higher. Look at the spread. Spread's 2 cents now. There, they pinch the spread, bring it up, big buy order at 61. And holding, seller still there. 360 still selling. There's the hidden seller on 360. And there he goes. Right. So did you see that? That's irregardless of the reclaim right here. Let's watch that again.
This was when you mentioned like as well, like opening a spread a little bit, which is I know it says I can't remember now what I like, maybe I can't remember what I was trading, but it sort of got to the point of rejection. So for the sake of the argument, let's just call it like 360. And it does, the whole time it was trading with a nice spread, like no spread, you know, it was 59 and 60 sort of. But then once it got offer trap at 360, it pushed with the AAs, pushed past the offer trap, but bid stayed below offer trap. So all the time it was trading with no spread, but once it came to the offer trap with the AAs, they pushed past the offer trap. So it looked exactly like this: 361, but bid never goes above the offer trap.
What else happened?
It's just what I noticed. Just these things, and then it just no follow through actually, like on the selling on the buy side. And I can't say much about the what size was used on the bid, but literally it looked exactly like this. So there was an offer trap at 360. They broke past the offer trap with some AA orders, and they opened like 1 cent spread.
But before all that happened, what did I identify? You're on your money. Like I'm having to talk to you about more advanced things because you understand the finer nuances of tape, which is amazing. Now you just got to build the confidence to repeat those concepts, like to get them to where you're confident in trading them. Okay, so the only thing you missed there, and I love what you said, and I love that you have it on video so you can hear yourself talk about like how intelligently you just read the tape. But the other thing you forgot to mention that you saw the hidden seller. You identified the hidden seller. You saw the zero. Okay, so here's the sequence that happens, okay? And it obviously doesn't happen every time, but this is a repeatable sequence. You see the hidden seller. You see the bid prop. The bid prop continues to compete with the offer stack. So you have what you call stalling, right? Then all of a sudden, the tape decides to slow down and it flashes zeros, okay? And you're at the high, so you identify that there's a seller there, okay? Then the price starts pushing up again inorganically with speed, and you see that offer trap that you just saw. But they drop the spread, and then for 1 second, they remove the bid back up to the ask. And what is that a signal of?
Remove the bid.
They raise the bid, like you said. They tighten the spread.
Yeah.
After showing you that there's a hidden seller, after showing you that there's a bid prop, after trying to use the spread to trap, and the offer does not chase the bid, as soon as they pull the bid up, what is your move?
Slam, load the boat.
I mean, you don't have to load the boat, but you're slamming the bid for a short.
Well, yeah.
Okay, so that sequence is there's a bid prop. Okay, you've identified a bid prop. You've identified that bid prop is a seller, right? Real buyers do not show their size. Okay, you notice that the spread was very normal. It was not spready. So there was basically a normal spread. Okay, then it gets to a certain point and you start seeing both the bid prop and the offer trap competing. Okay, no one's winning. It's an equal fight. And then all of a sudden you see that the bid prop enlarges. Okay, so now the bid prop is relatively higher than offer trap, and the price moves up to another micro level. Okay, then what happens is they don't want to prop the bid any higher because they don't want to take the shares up there. You start noticing the hidden seller shows himself on the ask and then flashes himself on the bid and then flashes himself on the ask. They might do it at the same time, they might not. Okay, Then you notice again that the bid dropped, or you notice that the bid dropped, and then all of a sudden the ask is not chasing it and they bring the bid up. Boom, this is your trade short. That's a lot, and you're not going to pick it up the first time, but as you keep looking for this, and I've given you a roadmap here, right? And we've talked through it. When you start noticing, when you start watching enough tape and you start noticing this kind of repetitive cycle of bullshit, when the bid pops back up to 360, boom, I'm in for a short.
Yeah, and of course you would be paying close side to the timing of the candle at this point, isn't it?
Absolutely. Absolutely. This candle's about to close, right? I mean, this candle just opened. Sorry. This candle just opened. So let's see what it does. We're delete your notes there. I'll just take those off there. All right. Candle is pushing. See that hidden seller at 61? There he is at 60. So he flashed himself over here, and now he's flashing himself over here. And my theory is that those are all signals between algos or riggers rather. Okay, we still have liquidity up at 365, so I do expect this to try to clear out the highs. Okay, 60 was sold. Okay, so that moment of hidden seller on 59 was a solid hidden seller, right? So 60 is selling. There's the, now he lowered it. Do you see that?
Yeah, there wasn't a bid, zero.
Yeah, on the bid, it lowered from 59 to 57, and look at the offer stack right below. All right, and I don't think that's a hidden buyer because of where we are.
Yeah, you wouldn't be buying at the top.
And there's the scare tactic, holding 50. Okay, holding 50 for 30 seconds, 1 minute, I'm okay. If it holds 50 for 3-4 minutes, then I'm going to put in a break even stop. But look at your shelf. Look what we have there. Okay, exactly like you saw me, I just picked this tape out of random. Right?
Yeah.
So what do you have? What do you have here? Look at that. See that? Where'd it go? Oh, it's right here. Look. See this? Right? Candle creation.
Yeah.
Look at this candle creation. Big volume, indecision candle, defines your shelf, right? Right here to right here. Your midline, clear out into the upper zone, wash. Is there follow through? I don't know, but this happened, right? It happened and it did it. Just like we talked about conceptually. Okay, I need 5. I need to use the restroom and be right back.
Yeah, I'll get some water as well.
Okay.
Okay, I'm back.
Okay, you here?
Yeah, I'm
Okay,
here.
so just to give you, one of the primary reason why I charge that extra, the double the first hour,
Mm.
is because I tend to go over on every session, right? So I just go ahead and charge it because I end up giving you that fifth hour almost every time.
Fair
Like
enough.
every client that I've done the 4 hour session with, like they go, 5:30, 5:40. I mean, 4:30, 4:40. Like I always go over the 4 hour mark. So I'm just kind of accounting for that because I don't want to leave you. I don't want to leave you without enough information, without enough tape reading. And then, I never know who's going to have super intelligent or lengthy questions like you do. Like you've made me go down little rabbit holes that I didn't plan on going down with you, but you've demonstrated that you have some really good concepts of seeing things on the tape. I think that's awesome. That's one of the coolest things about y'all's group is that three of y'all in there I've been working with.
No, yeah, those
So
meetings were actually really, really helpful. I mean, probably my last last month, maybe and a half or something, I think was, I would say, some of the better trading I've actually did in terms of like understanding more and feeling more comfortable rather than just entering trade based off, oh, it's at 350, I'll hit it at 350 just because it's at 350. So in terms of like getting that little bit extra confirmation on a tape, it's been absolutely amazing.
but are you like what we're doing here? Am I going deeper and more than
Yeah, no, yeah, definitely.
what
It's
Mark has been able to show y'all?
yeah, definitely.
Okay, good. Where did he put it? Okay. All right. Let's continue this. Okay, there's the seller again. You see him now? He moved down to 53, the zero. Right there, 54. And look at the repeatable sign that they keep doing. You see a zero with a stack, a zero with a stack. So let's see if they do it again. Did you see it?
No, I missed this one.
Look at the montage only, montage only. Left, right, bid, ask, flashing your eyes back and forth. It's right there. Saw
Yeah,
it?
yeah.
Double cell stack. Okay, and let's
There
see
was
what happened.
double zeros, wasn't it?
Double zero, sorry, yeah,
Yeah,
double
yeah.
zero. And there's the release. And where were they doing that zero stack? Now that we look at it, where was it?
54, I think.
And what is that? The shelf floor.
Oh yeah.
They're doing it at the shelf floor, right? And why do they keep bid propping the shelf floor?
To get more dip buyers in.
Entice more longs, right?
Yeah, because then if it's a shelf, so everyone's probably thinking, okay, it did here, push, pull back, loaded more, pull back, add more, take it higher.
Yeah,
But
I
that
agree.
didn't happen.
No, let's see. It's not over. Never mind. There is a big wash. So they trapped enough buyers in that lower portion there. And the reason they flushed this deep is because of this seller here as well. The seller was sitting below 350 as well.
But yeah, so this is, you would say, basically parabolic, isn't it? Mostly because volume as well, increasing, constantly increasing, and price went all this way up without any real pullback. There was nothing like, like this. It just literally gone like this.
Right into
Mm,
the level.
And then we've got the highest volume here at this. Next candle failed to break it with less volume. And that's your shelf mid-range, and this confirming that there's literally no more volume above 360. The hidden seller that was at 360, and the whole action that they opened the spread 59.61, and seller stepped in, started selling, and it dumps. So yeah, you can say once it gone below 360, or actually this failed push up of 360, risking this entry there in the second half of the shelf and see what happens. And probably would be looking at, I think maybe target would be first target somewhere here. I would want it. No, in reality,
330s.
no, in reality, sorry, I would take this. I think take a partial off here and then set break even.
Yeah, in this market, I would agree with you. If this was a weak cycle and we were in a faders market, if you've already identified that the seller is sitting here because of this candle and the fact that they flushed all this liquidity out down to 280, I would not look, it wasn't able to break out, right? It wasn't able to break out on the highest volume of the day. I would say that your first partial is in the 320 region.
Yeah, yeah, I don't know. I've been
That's in a
struggling.
weak market cycle right now.
I've,
Yeah.
I've,
But
I've been
this should be your first target.
I've been struggling a little bit with these like front side, and then went to take covers, and I was angry at myself a couple of times because I literally see what I want to see for a rejection, and it's like gives me all the signals and everything and a nice stuff, and I see a hidden seller, which is you get that one, and very strong fast green tape into, let's say, that same 360 or something, and it just goes nowhere, and then big tape steps with the sellers and it rejects that, and I get a good entry, and I still take a partial cover at 9 EMA on a wash basically. I've seen all that and sitting there thinking, why did you just do that? You literally saw what you wanted to see, or you've been waiting like all day long for. So why wasting that?
Yeah. So to create better habits, it's better to just take that trade depending on the cycle, not take anything off, set your break even or respect your stop. And if it comes back against you, so be it. It's still that's the tricky mindset of traders. That's not a failed trade. Once you're in, once you're in and the price action is going in the direction that you thought it would and things are working out, it's embracing variance, right? It's just a probabilities game. Sure, I like the mindset that is called fuck the algos. You take your profits and fuck the algos. But if you're staying in the trade, like this pattern should be like this, and then it'll possibly do this again before at 10:30, and then you'll catch the big move down, right? In theory. So what I tend to do on the first leg that I catch it, I tend to say, okay, I'll take the entry. I'm going to take a 25% hit as close as I can to my level, which in this case, like you said, it might be in here. I'll probably put a limit order right around here on this candle. And if it doesn't hit, then I'll hotkey out 25%. I'll hit break even, let this trade go against me. Or if I've taken off more, let this trade go against me. I'll stop out and I have another opportunity up here to catch the big move. Right?
Yeah, so if it does that and holds there and comes back, so you still play this well, you make your shelf bigger, won't you?
No, I'll move my shelf up.
So if
this thing
hypothetically, so
if this thing curls here, I don't want anything below this level. That's just me. That's how I trade. I won't take
okay, yeah, it makes sense. Yeah, you wanna biggest, I mean, like macro size, whatever, like clear out of that, because yeah, if it holds this, then you want to see us stuck here.
Yeah,
anything
because for my style, what's likely going to happen is I'm going to take a one hit, very large size here, and then I'm going to put a percentage stop loss, right? And then I walk away, and whatever happens, happens. I accept my risk, right? And that's one thing that currently I'm not trading that way because I'm not trading a lot right now. But in the past, like if I show you before this year, if I show you my win rate was less than 45%, but I was just taking a lot of these cuts. But when I do hit this trade, this is a 10R trade. And that's why I don't post charts every day, right? Because I have a lot of these little stop outs. This is last year. This year, I'm basically only taking A triple plus setups. I mean, I'm averaging because of July and August, I'm averaging 5 trades a month. Prior to July and August, I was averaging 7 trades a month. But this year, like incredibly, this year I have a 91% win rate.
That's a very sick win rate.
But I'm not trading very much, man.
Yeah, well, I know it's understanding you don't really need to, it's not the, how to say, not the numbers game, not the quality over quantity, more or less. And
that's the thing. It took that's not really how I wanted to trade. I got lucky, and that's why I'm trying to implement these little exercises with you. Like the reason I'm trading so little is because of the house build and selling this house, and we were showing it, right? And so I was basically forced into a situation that I didn't want to be in. But I realized by being forced in that situation, I was being a lot more patient with the trades that I did take. Because if let's say, okay, I only have the opportunity to trade one day this week, right? And I take a bunch of little nasty cuts, like with my old style of taking this trade full size and then just setting my stop loss, right? Because it cleared out here and just saying, okay, I'm taking my full size here. And then I just set my stop loss and then I just let it do whatever it does. I don't have that luxury right now because if I take that loss, I don't really have time to take more trades to make that back in a day, where in the past I'm sitting here, I'm watching it. Okay, I see it clears out one more time. And sure, I took this cut. Maybe I took another small cut, but then I caught this, right? Whereas this time where I'm trading, because I'm trading a lot less, I'm doing it off of much higher time frame. Like right now, I'm not taking trades off of anything less than a 15-minute time frame. Okay. And so I'm really waiting for that big opportunity, but I'm also with a much wider stop loss and slightly smaller size because I'm on a bigger time frame. But the point is that I was forced in that situation because of my situation, because of the things that we're going through. And now that I've gone through that situation for almost half a year, well, more than half a year, right? We're in August. It was an eye-opening experience. It actually taught me to start using limit orders, right? Like for this trade right here, I would just, if I was taking this trade and I thought it was an A+ setup on a 15-minute chart, I would just set a couple limit orders here for my micro size on a percent extension, like 5%, 11%, 14%, right? That's why that's what you're seeing over here. Like these are my percent extension lines that I've back calculated through data. And these are coded in, right? And I don't know if you remember M7, but he and I worked together on data.
Yeah, I think I remember. Yeah.
Yeah. So these are lines that we created by back testing. This is just percent down from open, percent up from open, percent up from open, percent up from open. Now these extensions now are currently invalidated, right? Because of NKD and AMTD and all these GR and X or whatever it was. Like these levels aren't really working right now. So they're invalidated, right? But the point being is that it forced me, because I'm trading a lot less due to everything else, it just forced me to tighten up my requirements a lot more. So I haven't always been that high of a percentage winner, is my point.
Yeah, well, it makes sense.
And I'm not trading the size that everyone thinks I'm trading. I'm trading smaller than everyone thinks I'm trading currently, because I'm not trading very much. I don't feel as comfortable with the tape. That's also one of the reasons I was super excited to do this session today, because it kind of forces me to look at some recent tape.
Yeah, that's what I'm looking forward as well. So meetings with Mark and guys all the time as well. It like forces me to actually listen like other people's opinion as well, what they see, and then see if I see that and if I see differently.
Yeah, for sure.
It's a good meetings.
Yeah, exactly. Okay, so what's the next one? Let's look at another ticker. What was a good one? I know AMTD was good, but I don't know what day. I guess I started watching this one. Let's see what this one does. Okay, AMTD. Well, you don't really trade this high a price, right?
Yeah.
Well, but you know what? Let's look at the spread manipulation on this one. Let's use this one for a little spread manipulation. Okay. So let's get to a viable point. Okay. Let's watch that. Oh, that's a halt down. Oh, this is day 2. I think. AMTD.
Yeah, there's a hidden seller at 45.
Okay, there's a big push. Look at the spread. Saw that? Look at the spread. Watch the spread here. 5 cents. So it went from 4 cents. See if I can catch it. 10-cent spread, right? So automatically this is a spread manipulation. Okay. We identify that right off the bat. And that's because it's a little higher priced. It's not a D-SPAC, but they own NDK or whatever, NKD. And so this is spread manipulation ticker. Okay. So we can identify that. And we know that typically based on the price point, we can identify that. Okay. This is how they push it up higher with spread manipulation. So we have a 10 spread there. There's not a lot of volume on it. It's been trading since 4 a.m. and it's already done 43 million. So it does have good volume. Okay. So Spread tightens up and then immediately drops back down. So the bid was at 42 and down to 39 now. Okay, then they bring it right back up and increase it all together. So they go from 23 to large spread back down below and then immediately big spread, and then watch how they pop it into the 50s, right? They just bounced everyone who got short. Okay, and they're doing it what? Look at the tape. What do you see on the tape?
AA orders.
Not only AA orders, but in between all the buy orders, you have the algo, right? So the algo keeps buying the liquidities at the lows so that this price can't go lower. Make sense?
Yeah, so it's these ones.
Yeah. Yeah. So what he's doing there is he drops the bid, and then he fills himself, and then he brings the bid back up. But they have to fill at the bid. They have to make it look like something real is happening, right? And there has to be an exchange of transactions, but they do it in order for the offer not to drop down and reach the bid. The algo will just drop the bid, put in, basically it's like spoofing, right? They'll put in a big order down there and they'll fill part of it, and then they'll pull the bid back up. It's completely illegal, but it's untraceable. And now look where we are now. We're in the 1190s. And here we're doing it all over again. Look at the algo just coming in little windows here, right? Look at the algo just coming in little windows here. Boom. Another window, right? And everything is inside the bid ask because he's exchanging shares for his own benefit in there. You can't get in there. There's a 5-cent spread. You have to hit the market, but you're going to get filled on this, in this place. If you hit the market here, you're probably going to get filled closer to 40 because the liquidity is there. I mean, closer to 87. I was saying 40 because this number is 40. Does that make sense?
Yeah, but that's, you mean like long side or covering? Because
No, if you're going long, you're
Yeah.
getting filled 5 cents above where you want to be filled. You want to be filled at 82,
Yeah.
right? You're getting filled way up there. Now let's see how they drop let's see if they drop the bid here. Okay, so there's the push into 12. Look what we see at 12. So what is the only way if you want to go short this above 12, what do you have to do?
If I want to short above 12, set a limit order.
Okay, what's the other way?
Other way.
Think
above
spread.
ours.
Think spread, like the last ticker. What would they do to the bid?
Pull it up.
Pull it up, right? You got to
Yeah.
catch that though. So in reality, what is the most efficient way to get in? Like you said, a limit order. Or you can just be super quick draw and get in when they pull the bid up. Let's see. So we went from 1199 down to 1184. Right? So your best fill was 1195. Let's watch it again. We're in the 80s. Boom, look at that spread, 5 cents. They jacked up the bid. Okay, big offer trap. Right here, I can tell you that this is a good place to short. I had an order sitting at above 12, like at 12.12, 12.14 or something like that. And I never got filled. And then I think I canceled my order and then I just started watching, and then this thing went up, would have filled me, and then slammed down and halted down. 96, there's the tightening, right? Look who's sitting at 11.99.
Yeah, but hidden seller, and then you've got offer trap below, just above it.
Why do they put a 0 at 11.99?
To make it look weak. So everyone who's joining in long to entice more longs.
To make it look strong, you mean?
Yeah.
Okay, so think large.
Like opposite, yeah.
Yeah, so think large caps, right? If there's liquidity up here, they're going to go get it, right? If we're in this area and here's the expansion, there's liquidity up here, we're going to go get it. There's nothing on the offer, right? There's nothing at 11.99. So what does that tell me? It's going to skip through 11.99 and go get 12 and 12.05, right? So this is going to be a quick skip up because there's a bid coming in, green, 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 0 on the ask. Oh, I'm going to get filled 11.99. I'm immediately going to be in the money because it's going to bust through 12. Okay. Make sense?
So that's thinking from the long side.
Correct. That's thinking from a.
It's like I'm gonna hit it at 99 because there's nothing there, and it's gonna go straight past this. So
because we're at 11.96 and the tape is green, and they've already bought 12. Look at that, green, green, green at 12. So they tested 12. Now they're going to do a little pullback, and then it's going to rip. But all the time, what do you know? What's at 12?
selling.
It's a seller, right? This is a trap. Okay.
Yeah.
You see
Yeah,
how
but based off the chart, what would make you think that 12? What made you think that 12 is a good area? Because you've got pre-market high this. So yeah, I was thinking like, okay, so I would be drawing like a area like this, sort of maybe a little bit higher, something like this, from 11 to 12 basically. And then wouldn't you look at this above 12, above this, like that it may come to reject this?
what did I identify? Okay, so all that is fine and dandy, but you're chart trading, right? So we're going to get you away from chart trading. Okay. What am I seeing? Big volume at 12, right? 1, 2, 3 rejections at 12. A big wash through 12 here with high red volume. Okay.
Hmm.
Okay. The volume capitulated in the pre-market, which my stats tell me that if something capitulates between 8 and 845 or 850, the likelihood of it coming back to there is not going to happen until around 10:30, 10:30. Okay. So this short down to like 9 or 10, maybe even to 8 is a great opening short. Okay. That's all based on statistics. Now, you're chart trading, which is understandable, but we're looking at the volume, we're looking at the number of rejections, and also what did we identify that was happening? The rigor was using spread to manipulate. And then once we got into the 12 region, which is a whole number, psychological number that's been rejected already, right? What did we determine we saw at 12? Well, we saw
So
a hidden seller. We saw an offer trap that most buyers think this is going to be a breakout because there's so much liquidity. In order to buy this up, you've got to put in a lot of volume, right? And that typically takes you to the next level because it's got to rip through 12. But instead, what they're going to do is they're going to remove that, or may not even get there. They're going to remove that, let it pop through, and then shoot down and reintroduce the liquidity, right? But this bid with this 0, right? And mainly because this is all green and this opened with a dip and is now pushing green, is enticing longs for that breakout. But you're a contrarian. You know that by learning to see the nuances that we're talking about, that most likely the opposite is going to happen because you're seeing the manipulation firsthand. Let's run it. So we're 99. You saw that, and now we're immediately at 1180.
oh yeah, that's instantly.
Right? You saw that?
Not
Look.
even
39, 40, 70. There we are, 99, 95, 98, 12. Buy, 12. as in buying, buyer, 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 buyer through 12, and then immediately right down to 80s and 60s. And now where's the seller?
70.
73, right? Look at the hidden seller.
Oh yeah, because that's sorry, my bad.
73. Okay. Kicks to 80. Now where the seller showed himself on 74 on the bid side. The 0 just popped up on the bid side. Look. 69. 75 pops up right there. 74. And look at the offer stack. Okay. So that's telling me that he's selling 74. Yeah, price is going to go back up, but he's selling 70. There's the rip. It's exactly the move you want before getting in. The higher, the better. Into the 30s, rip to stalling. And then where do you know the seller is? Where did you see the seller was sitting? $1 below, right?
Yeah, what was that? 11.74, wasn't it?
Yeah, exactly. So you know you're not taking any partials above that. You've identified where the seller is sitting. Sure, you're making an inorganic move higher. That's expected. Look at the volume relative to the previous candle. There's nothing.
But it just opened, so you still would have to wait. So I suppose now you would wait for 20 or between 20 to 40 seconds left because it opened high. And if it pushes and you look for entry somewhere when it's closer to close, well, 20 seconds.
That's what you're looking for. Yes. What I'm looking for is the spread manipulation and to see if the seller is hitting it. There's the bid prop. 55 sold, 50 sold. Now they're going to move it back up to 60. Okay, there it is. 55, 60. See that? Look what happened at 55. So with that spread manipulation right there, and when they sold 50 and then they bumped it all the way to 69, I'm taking some. So now I'm in the trade. Sellers at 75. There's my ad. And look out below. First partial is under 1170. Waiting, rejected 1170. Rejecting, there goes the fake orders, popping it up. You can add right there, 93. You can add right there, 12. 12 is going to reject. There was the hidden seller at 94, walked it down. There he is at 90, holding 90. Okay, there's the bid prop into 12. Selling 12 and gone. So everything that you see on the montage, it's almost opposite of what the montage is trying to tell you, right?
Yeah, it's
like what the things that I'm saying are opposite of what the montage is tricking your brain to thinking. Would you agree?
Yeah, absolutely. Yeah.
That's by design, right?
Someone's playing games, so yeah, even like the offer traps as well. So it puts it there and like, okay, it looks weak. So I'm gonna short this 7.5 risk, 80 whatever, just above this, and then I'm golden. And this looks weak, so it's like, oh yeah, it's like, I'm gonna short it here.
But in this case, you can't. In this case, in a spread, And here's the major concept learning, right? In a spread stock manipulation, once you identify, well, first you identify where the original bid prop is, where the seller sits, okay? Which we identified that the seller was sitting at 1170 back when we were pushing up, okay? Once we've identified where the seller sits in the 70s, then we want to identify how much they're using the spread to manipulate this, okay? So I saw 2 cents, I saw 5 cents, and I saw basically 5 was the max that I saw. Oh, there was one 10-cent spread, but that was right on the initial burst, right? Which we only saw that because we kept pausing the tape. I wouldn't have been able to see that 10-cent spread. Okay, so we've identified that the spread is roughly 5. So I'm going to give it a little room and say that the spread can get up as big as 7. Okay, so now I have my safety. I know that I can't get in on the bid because this is a spread manipulation. So once I have identified this, I want to see what level the seller is truly selling, right? Because he'll move the bid up, the ask, like we said, but he'll leave the bid down. And then he'll come down and fill himself on the bid. And I identify that through tape, right? Which we saw that he pushed this up to 12 and it was all green, right? He filled himself on 12. But there was no order at 12. There was a 0 at 11.99 and there was 12 below it. So how the hell can you fill 12 if the price is sitting at 11.99, right? So that happened in a flash. So the fact that that happens so fast to make the speed tape up and just make it look green and entice buyers, that tells me that that is a potential short because of the manipulation that the rigger had to create in order to get the untrained eye to think that that's a long, okay? So now I keep seeing that this never comes down. It never comes down and meets the bid, okay? So the ask does not do this. Instead, the bid just keeps dropping, right? That arrow is confusing. So the ask never comes down to the bid. Instead, the ask stays and the bid flashes up and then flashes back down and then flashes back up. And the ask moves up from here to the next level and the bid flashes up and flashes down. Okay, so now I've identified that. Now what I'm waiting for is to see the stalling and how many times this happens, the sandwich, right? If I can identify somewhere within like 5-10 cents that this happens consistently, and every time the bid drops back down, every time the bid pulls up, there's red on the tape, that's telling me he's just selling. He's just trapping and selling, trapping and selling. So even the price action is going this direction, the rigger is going this direction. And that's what you don't see. That's what the naked eye doesn't see, the untrained eye. Price is moving up, but the montage is telling you, the montage and tape are telling you something completely different. And that's why you cannot, we can't, that's why, unless you're just a complete pattern trader where you say, okay, if this comes up to the 50% retracement of this move, I take my entry and then I set my stop 3% above the high a day, my stop loss, and then I walk away and, go have lunch or do whatever and hope that this thing finishes, 30% down. That's a system trader, right? That's a pure system trader. That's a chart system trader, which is effective in some markets. These days, not very effective in small caps.
Probably large caps, probably more so.
It can be done in small caps, but you're really pigeonholed into only very specific market cycles, right? And even now we've realized that in those specific market cycles, the manipulation is so strong that this is a very difficult way to trade. So I know that the best traders that I've had the opportunity to talk to, big 7-figure traders, they're good at 2 things. They're data backed. They're driven by data. They've back tested. They know this. They know where their potential targets are. They know how their potential entries are. They know where their risks are. Everything is based on percentage, and they're good tape readers. Okay, because the tape reading is what helps them adapt to different markets. And the percent extensions and the data is what helps them in their selection based on different markets, right? So right now I'm not shorting anything that's below. If it's between a $2 and $8 ticker, I won't short it below 75% on a day one, right? And preferably I'm looking for a day two where the day one pushed up and then the day two opens here, pushes early and then rejects on lower volume. Make sense?
Yeah.
That's just statistical trading. So sorry, I went into a little tangent there, but what we were talking about is the fact that this is to the untrained eye, this is just a spread manipulation ticker, and what we have to wait for, because the ticker is going up, but the tape and level 2 are saying that we're going down, we have to wait for this to sandwich. So we have to wait for these instances, but we can't just bank on one of them. We have to see it multiple times before we can say, okay, on the third one, I'm doing it. When this thing does it again, tightens up, I'm getting in on the bid. And you have to know your defined risk, right? Like in this case, you know, I would say my risk is probably in here somewhere. If it gets above 1350, I better manage my size into 1350 because this goes against me. It puts me in some pain.
Yeah.
Right. So it might be a quick cut. These might be quick cuts. And this type of trade I only take on days where I really just, and that's the reason I post so little on whatchamacallit, on Twitter, because I just like to post the trades where I'm just feeling the tape, like those days. And you'll notice that those charts I typically post on there, they have a lot of entries and exits. It doesn't really tell the story of what I did that day. It's like I'm in the zone that day and I just feel the tape and I can see every little nuance in the tape, and it like almost slows down. And even though I'm trading these little tiny microstructures, I'm trading them with size that just empowers me, right? I'm so confident that I'm reading the tape so quickly. Those are the charts I like to post, just because I know what's behind them. You know what I mean? Like the effort it took me to make that.
Yeah, well, it makes sense. Yeah.
I'm just very proud of those charts, right? Whereas if I have like, you know, like that PTPI trade, I took that trade with those guys and caught that that sell off. Yeah, the fake news.
Yeah.
Yeah, but I had decent size on my starter for the price point, but that's just pure luck. There was no tape reading in that. Like everyone in that group, Horizons, was shitting bricks that thing was going to open $2 higher. And then we're all pleasantly surprised, right? Like, and I don't understand how that's trading. Okay, that chart looks great on Twitter, but between the time that it halted and the time that it opened, like my butthole was so sore for 2 hours because I was clinching it so much. You know what I'm saying? Like, I see that the chart looks super sexy on Twitter, great, but everything in between is like, fuck, this is gambling. Like this thing could open up $4 higher.
Yeah, it could have gone both ways.
So I don't see the edge in that. Do you see what I mean? Like,
yeah, it's just some of the like, yeah, it's
we got lucky.
Smaller lot of size and just pure.
Yeah, pure luck. Yeah, and that's what I had on there. I had a feeler order. I think I had a one. No, it was a dollar ticker, right? Yeah, so I had 25% of a position I would have liked to take. So I made a little change, but still, like, it's fucking lucky. That's not a trade I want to. I guess the point is, in my psychological game, that's not a trade I want to be proud of, because I don't want to. I'm an aggressive. It's weird because I'm a very conservative person, but I'm an aggressive trader, and so I don't want to go out looking for those types of trades, because if I go out looking for those types of trades, I'm gonna lose.
You're gonna get burned.
Yeah. Over a numbers game, you're gonna get burned. Exactly. So to me, that's just a pure luck trade. Okay. So sorry, rabbit hole there, but so this right here tells me a possible trade. So let's see it. Let's and we're just about done here. This will be a good place to call it quits on this one. We got some good tape stuff, but let's look at. Okay, there's flush. There's 50. Now look where the seller was sitting. Big seller at 50. Right there, 52. See the offer stack?
Yeah.
So 205 and 195.
Yeah.
And then they filled. Okay, so the algo filled in the inside the spread. So this thing well, let's just watch. Now 11.
1102 stack, yeah.
So what, well, look at the way the price is moving down and the volume is getting bigger. So what does that tell you? It's a seller, right? There's just a seller. There's someone trying to unload size. Someone, because it's opposite of what you would think a normal stock would do, right? If the offer is moving down, if the price action is moving down hard and the volume on the montage on level 2, the orders are coming in massive, 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 you think it's going higher. But this is not a normal ticker, right? This is manipulation. So this is just someone unloading size all the way down to 1050, right? And it's not until we see the volume drop off that I bet you it's reversing. Okay, so there's the inorganic push. So if you're trying to get a fill at 11 or 1150, this is a good place to start putting in your position, right? There's the bounce. Okay, 11. There's the offer stack coming in. There's the inorganic orders, AA. There was the seller on 1117 with a 0. We're up at 1125. Exchange, spread, got increased a little bit, 4 cents. Now tightened again. Now increased again. So they did it all over again. So watch that. So watch how the spread, the ask moves up, but the bid doesn't move. The bid doesn't chase it. 5 cents, 29. They dropped the bid and they dropped the ask. You see that? So they dropped it with 5 cents, but neither one of them brought up, but they are selling because the bid is dropping, but they're keeping the spread because they don't want low slamming shorts to get in. Okay, 5 cent spread still. And now they sandwich it at below 20. So all those longs that were getting in for the 1125 breakout, now they're out of the money 8 cents already. Now they're out of the money even. Did you see that spread right there?
They tighten it up, no?
No, 12 and 0. Watch. Oh, shoot. What happened? Look, it was 14 and 21.
Oh, yeah.
Right there. Look at that. It was 7 and 16. They just bumped it up 2 cents. But it was basically a 10-cent spread at the lows. So, and then they tighten it down. You saw that went to 7 and 8.
Yeah, so once they do that at the lows, would you say it's for those that want to do the breakdown short?
Yeah, breakdown short. They're trapping them on the bid and then they're squeezing them.
And then straight away tightening the spread, bring it up more towards the ask, so they straight away out of the money.
And they get spooked because they took too much size and now they're out of the money 10 cents. And so they're going to bail on it. And that rigor is going to take that liquidity to bring the price below 11 harder. If he can, he's going to use that liquidity to flush 11. Because at 11, inevitably you're going to have dip buyers, right? And smarter traders, good long traders, they're going to have their limit orders underneath 11, so they're going to get filled on limit, right? They're letting the trade come to them. But when this rigger flushes 11, he's most likely going to flush it down into the 70s, 80s immediately if he has enough liquidity from these low slamming short traps. Just listen to all that again when you replay this. It'll start making sense. Okay. I'm speculating here, but that's what I'm seeing. There it is. 11 wash, 1190, 70, 87. Like this should, I mean, I sleep with these images in my head.
Looked like it was stepping down as well.
Yeah,
Like
absolutely.
once it washed below 11, it put like a huge stack. I think it was 1090s or something.
Yeah, but let's watch that sequence again, okay? Delete. Okay, so I'm going to slow it down even more. Watch this. Okay, so there. Bid ask is pretty good. The spread is not bad. Okay. On the chart, we've had this huge flush candle, and now they're going to work to reclaim it. Okay. Washout longs, right? Washout longs think, okay, after a flush like that, it's got to go higher. Okay. Spread's okay, 2 cents. Okay. I said it'll go into 11.25. We just saw the inorganic price action followed by algo. Okay. Nothing there. Look at the algo, just keeps taking all the internal liquidity. That means there's no one else in this thing. You get the sporadic sells at the bid and the ask. Okay. Still a 3 cent spread. Okay. Now volume picks up and spread increases. They tighten it. Volume picks up and spread increases, and then they immediately bring the bid all the way up. The bid was at 1107 and they brought the bid all the way up. And how do they do it? By buying on the ask, by selling on the ask. Okay. So here's how it goes. So if you have a bid here and a spread here, and there is a way to transact orders here or here, what's going to happen to this bid or this ask? One of them has to go down and meet it, right?
Yeah.
Does that make sense?
Yeah.
Like there is no way to transact unless there's someone there to transact with you. And so if the algo is just transacting by itself, or through spread manipulation, he's going to drop the bid, then he's going to fill himself on market here real quickly, and then that's going to pull the bid up, and he's going to fill himself on market here, pull the bid up, and then he's going to pull the bid up. Because that happened inadvertently, that's a recoil, like a band, like a rubber band, right? When you recoil something and then you let it go, it's going to shoot, right? The rubber band effect. Make sense?
Yeah.
Okay. So when that recoil happens, what happens? After that, those orders are filled, that thing recoils, hits, and then bounces right back to here. So now your bid is back here again. This is a recoil effect.
So those like in between ask and bid, the algo fills. I'm never quite so sure how much do they affect the price. I kind of totally, to be honest, most of the time I just ignore these. The whole like white orders, I don't really pay attention to those.
Yeah, you don't pay attention to those in a I agree, but this is a spread. This is a technique. This is a spread right?
But they do affect the price.
In this type of ticker, especially in this, in a spread manipulation tape, they affect the ticker immensely.
To sum up more or less like what you said about like spread manipulation. So they open the spread, make this is not open spread. Yeah. They make whatever 8-10 cents between this. So once they fill this between ask and bid, so as you said, like get filled here, which in return pulls this up, then they get filled here, they pull build bid more up here, and that's how the actual spread tightens.
No, that's the recoil. So, so you're almost on it, but what they do is they fill here, right? And it's low volume. And then they move it back down, right? And then they'll lift the ask, and then that'll naturally raise the bid. And then they'll fill here or here, and then they'll bring it back down, right? But then if you do that enough times and you've twisted the rubber band, right? You've twisted and you keep twisting it. Eventually, when the rubber band releases, what does it do for an instant in time? It coils more before it unleashes. Okay. And that's just physics. So as you're coiling the rubber band, right before it's about to snap and go straight, it recoils and tightens a little more. That's why you see tightening patterns like this, right? That's a big pattern and then a tightening pattern, because the coil, the twist that they're creating, and I'll have to figure out a way to express this without the physics, has a recoil effect. And so that recoil effect is what makes the bid come up and then snap back just before it does this. So this is the coil. It's coiling because of all this. And then right before it releases, bid comes up and then snaps back. And this is the release, the straight part. You'll see that concept once you watch a few of these tapes. I promise it'll make sense over time. And if it doesn't, just go read a little bit about physics and coil effect and see if that makes sense. And if it doesn't, I'm always here to I'm going to add you to another room in the group called the Rabbit Hole. And so it's just the three of you guys in there for now. And you can ask questions you want in there.
Okay.
Okay. I'm always trying to make myself available. And like Andre said, if I don't get to you, today, I won't leave you high and dry. I'll get to you eventually. You know that.
Yeah. Right.
So don't feel like if you don't understand anything in this lesson, I would not have really taught you this in depth of a spread. I would have just showed you how they manipulate the spread, and I wouldn't have gone into so much detail of how you can enter it. But I felt like you understand tape, better than most beginner guys that I've worked with.
No, yeah, it's I try to avoid these the spready ones. And especially like this price level. It's just even like looking at the slower speed, it's still too fast for me, because it just the price keeps jumping, instantly by 10-20 cents, which for me is a big no-no.
Yeah. And maybe this is something that you start, expanding your playbook in, in a couple years or something. But don't, just because you don't trade them, don't periodically at least review some tape on them.
Yeah, it makes sense. It's just a different kind of.
Well, no,
You could say
because
like a.
this
you could say
happens.
like-
This happens in the tickers that you trade. You just can't see it because it's much tighter. The reason I'm teaching it to you on a big ticker like this, high price, is because it's a lot easier to see it. Because the spread goes from 5 cents to 12 cents, right? Or to 15 cents.
Yeah.
Whereas on those smaller price tickers, when they do it, the last one that was super good about doing it was Mullen. Back when we had that little era of those runners, Mullen, and what was the other one?
I think it was in the same time as Siga, no?
No. Mullen was at the same time as what was that ticker?
DBX maybe?
No, it was started with a B.
BTTX?
No, before all those.
Should have it maybe.
January, Mullen, let's see. AMC, Endo, KSBC. Oh no, Mullen was before that. Mullen was in 2021. December?
June? Can it be June?
No, not June of this year. Mullen was way back, wasn't it? MULN?
I have a chart of Mullen MULN from June the 1st.
No, that was already done with all its manipulation at that point. We can see it here. Let's go to Mullen. Mullen, MULN. The daily. Yeah, it was back here. It was in November. No, it was here. It was in here. This little grind right here. So March. March of, is that this year?
It has to be.
Yeah. So I was way too far back. April, March. Oh, NRSN. Yeah, it was NRSN. Yeah, it looks like nothing right now. But right in here, this was a nasty squeeze. That was nasty liquidity squeeze right here. Anyway, at that time, they were manipulating these lower price because these were in the $3 range. Mullen was too. Mullen in that era, in that time was, yeah, in the $2-3 range. And what was that fucking ticker? It ended up crashing hard. It wasn't NRSN. It was. Anyway, doesn't matter. They were using the spread to manipulate the lower price tickers, and it was really hard to see because the spread was only bouncing from 1 cent to like 3 cents or 4 cents max because they're really low price tickers and the volume is quote unquote much higher, right?
Yeah.
You typically see like you don't see double stacks. You see like triple quads, or you see like a lot of stacking. You'll see like 7 or 8 levels of double stacks.
Yeah. Does that is it affected by the floats? Would you say? You know, the more you see, the bigger stacks. Is it depending on the float? Something like, let's say, above 30 mil float.
Yes, and also it's affected by how much of the float is being held by one party, like insiders. And it's also affected by their over allotment plan, right? So if they have dilution, which ultimately Mullen and that other ticker did, then if the underwriter has what's called an over allotment. So let's say the ticker, let's just for a round number, the ticker is a 5 million float, and the rigger, the underwriter, it needs to run it up from $3 to $7 because there's warrants, right? And it happens to occur on a cycle where this thing could run to 15, 20. Well, the underwriter is given by the owners of the ticker is given a bonus amount of shares, right? And those shares are only allowed to use if certain monetary and volume criterias are met. And it's really at the discretion of the rigger, because they're the ones that are taking on the liability of that money, right? They told the owners, we're going to raise you $50 million. Well, if they don't raise, $75 million, they don't make any money. You know what I mean?
Yeah.
And so if they have 5 million of the float and they use all 5 million and they only make 50 million, really wasn't a successful plan. But if they have 5 million of the float and the price is already $3 above, or is pushing into the warrant level, and the volume is just picking up, well, the underwriter has maybe 2 million, 3 million more shares that they're allowed to use to make more money and to pump the stock, to manipulate the stock harder. So that's called an over allotment. And those amount of shares are tied to some sort of financial instrument. And typically they have a what do you call it? An expiration date on them. And they're only allowed to use during certain events, like dilution events, right? You really have to dig through the financials to find that information.
Yeah, mate, okay.
I can share some, what do you call it? Some articles that will help you understand a little bit of that.
Yeah, that would be nice. And so would you say that's like over allotments and like all this, is that something you picked up on when looking into the dollar volume? As in, like, to identify, okay, how far they can take it, how much shares do they have?
No, that's straight.
Of
That's straight filings.
That's just okay.
Yeah, and the way that I learned that was, if you go, like, I have my own little Discord, right? Just me, all my information in here. And then let's see, where is filings? At the market offering, no convertible. Yeah, so I think this one, dilution, shell dilution document. Oh, no, that's just me defining some stuff. And it was this parsing pennies one. Unusual cashless warrants, decoy IPO. Yeah, so this one talks about how they have cashless options to exercise their shares. I mean, it goes into some nitty gritty about that information. And then with YouTube, this lady, trading fit girl, she's really, really good. So I watched all her stuff on videos. And she looks how she looks, but this lady has I think 3 or 4 master's degrees. Like
Isn't she predominantly along?
Yeah, she's all long, but she teaches how to do LPX, which is lockup expiration trades. And then she'll talk about non-compliance. Yeah, so her stuff is amazing for dilution, understanding dilutions. She focuses mainly on uplistings, OTC uplistings, and also on lockup expirations. And then she also, those are her 2 main that she publicizes, 2 main things she trades. And then what's the other thing that helped me a lot? Yeah, parsing pennies. So this guy has a lot of good articles. Let's see if I have more in here. Dilution. Filings. Yeah, some of the same stuff in there, but. Oh, this is an amazing article. This guy's really good. Auspex research.
So it's longer.
Don't write these down. Don't worry about this stuff right now, man.
Okay.
I'll share them with you all in due time. We'll get to this stuff.
Okay.
I'll teach you some dilution stuff. Honestly, dilution right now, there's no edge in it because of dilution tracker, right? This thing has made everybody a dilution pro.
Expert.
Yeah, it's the information is too easy. So dilution plays are a lot tougher now. But yeah, like you said, everyone's a dilution expert because of this. So it's all great information, but really the key for you right now is to try to focus on becoming more of a level 2 montage trader and less of a chart trader. But I'll share all this stuff. Don't worry about it. I don't try. The only thing I keep from people, as you probably know, is this, right? My model. And that's because I have an NDA. I just can't share this.
Mm.
Okay.
Yeah, that's the zero chats for me is still not understandable, so it's fine.
Questions?
Questions. I forgot. I think. Wait, there was about the spread opening, which we actually covered, and we saw it on the tape as well. Oh my god, I forgot now. Oh, I wanted to ask like a quick question as well. It's not at the open because I probably wouldn't be able to notice it really fast, but on like let's say in the afternoon when they do like push some supply or something, you know, and what it does is you see on the tape. So let's say take this for example.
Oh, sorry.
So it gets to like let's say this level something, or let's say better 12. So you'll see like 12 off a trap of, you know, whatever, can be like 100 or something. Quite a decent like an alpha trap, 100 and let's say 90. And then a big order goes through, it actually gets filled on tape, which is gonna be like, you know, 10K getting filled, and that's actually getting eaten up. But it no major follow through. And it goes a couple of cents above that, but that straight away you're gonna see same amount being sold as was being bought to clear the offer trap. So let's say, you know, there was still 10K into the offer trap, and then it goes above offer trap, and then you straight away you see, let's say, 7K sold, and then another 3K sold, and it goes below. So would you say they try to entice like a breakout to entice, but no one actually joined the party? Like, you know, small fish didn't buy it. So what they did, what they bought into the offer trap, they sold it straight away after seeing that there's no follow through. Now, would that be an indication of like, okay, this thing is like, you know, toast. It's not gonna go. It doesn't have legs.
I mean, that's such a finite question, but what I can say about that is that in terms of offer traps, if an offer trap is fully filled in its entirety, then think about it this way. Does obviously we don't know, but it can give you kind of a glimpse of something, right? The rigger has an imbalance now, right? If his intention, think of it this way, if his intentions were an offer trap, would he have filled all that order?
Probably not.
No, because he needs liquidity to do what?
So unload.
Right. And so if he gets filled the entirety, he can't unload, can he? He probably can't, right? He doesn't have enough shares to unload.
well, there's no follow through, but it's weird because he managed to buy and unload the same size, which is, I'm just thinking like, is it something I should be paying attention to you know, the size that's being filled on a big tape, on a big tape? Should I be concentrating in that in terms of like, you know, the actual like balance? So you want to see, of course, you want to see in balance for the price to go up. You want to see in balance it being mostly green compared to like small red, which is indicative that it's going to go push more demand with volume coming in.
So, okay, that's a very advanced topic. And the way that I do it is I identify which rigor I think is not involved in the manipulation. Okay. So which route here, and then I go and I remove that route. Like in this case, I would remove FADN, right? Because I don't want to see any of the algo play. I just want to see the green and the red on the tape.
Even after seeing this,
Yeah.
you would still consider removing this?
Yeah, I would do it I would do it as an exercise to see what the offer trap and the bid prop are actually doing, right? Because look here, you have EdgeX, you have NASD, right? You have ACB, which is a big spoof channel. This is big for spoof. Okay, this EdgeX is primarily what do you call it? Retail and smaller funds, hedge funds, right? This is open market ARCA. This is open market total view NASDAQ. So these are very hard to identify. But FADN for DOS is typically the algo, the dark pool trader. And so if you remove that tape, and man, I really don't want to tell you this because you don't need to be going this in depth. But if you remove these algos, you can really start seeing how the volume nodes work, right? So a volume node. So this chart here, where is it? This is my volume node chart, and currently I do have candles, but normally I take these off, appearances, and I put a line chart. Okay, and now let's look at something more liquid. SIGA. And so now I'm trying to identify symmetry of these volume nodes. I don't really care what the price action is doing. I'm just looking at these levels based on symmetry of volume profile, right? So that's symmetry right there. But that's a low volume node. So I'm going to change this over to show the price on left. And that's just kind of how I distinguish between them. And I'll get to the point here in a second. So what I'm looking at here is the reason I'm removing the algo is because where is the algo going to trade predominantly? In the chop, right? In the high, huh?
Mid-range?
Yeah. Why is the algo going to trade predominantly in here? Because they work on guaranteed liquidity, right? And they're so fast that they're chopping up people in the microstructure, right? Makes sense, right?
Yeah, probably the size they use and entries exit, they don't have to take a big move. They can actually play the small moves.
And they're trading millions of shares, right?
Yeah, so as
And
I
so
say,
if they're trading up here, they get stuck with liquidity, right? They could get stuck with liquidity they don't want. They could get stuck with supply or demand they don't want. But if they trade in here, they're guaranteed fills. And their system is so much more refined than ours that as you're exiting here, they're entering here. As you're exiting here, they're entering here, and vice versa, right? So that's the ultimate MO of an algo, is to chop people up and make 3 cent, 5 cent, 4 cent moves on 50 million shares. right?
Yeah.
That's called
Yeah.
high frequency trading, right?
Yeah. Yeah.
So then why do I remove the algos? Because I want to see the true order flow that's happening in this void. I want to see the true order flow that's happening in this void. I want to see the true order flow that's happening in this void. So when I do that exercise, I'm only paying attention to volume breakouts, right? So I'm only paying attention to places where, do I have another chart with volume profile? Yeah, I'm only paying attention to places where we're in between the volume profile, like right in here, between 22 and 23, and then above this volume profile is right in here somewhere. So above 2350. Make sense?
Yeah.
So it's just an exercise of viewing tape. That's how but even when I trade, if I'm trading what you just defined, right? If they fill 100% and I can't see it in this tape, then I'm going to remove the noise that's causing me not to be able to see it.
Mm.
Makes sense? So I'm going to do
Yeah.
two things. I'm either going to increase my bulk tape to a much higher number,
Mm.
or I'm going to go over here and I'm going to remove certain routes. And maybe I'm just going to leave all of ARCA. So ARCA would be ARCA, ARCQ, EDGX, and IEX, right? So all these EDGX, IEX, and ARCA belong to ARCA book. Does that
Yeah.
make sense?
Yeah. So essentially removing the noise, and so you can see more by either increasing the size, so you can read. But that's size, I suppose you're going to be doing based on liquidity.
I have a couple methods that I do it based off of, but I'll teach you that. If we get to more lessons, I'll teach you how to simplify your montage to see very advanced nuances. Right now, I need you to focus on bid prop, right? Offer trap, spread manipulation, okay? Hidden seller, hidden buyer. But I think a lot of these things have been brought up to you in the group, and you've kind of learned things on your own and learned through your group. But now I think I hope what I've done is I've tied together how some of these are used in cahoots, right?
Mm.
Like used together. And I gave you on a couple of tapes, I gave you roadmaps of how to identify those things. And the two or three that I gave you a roadmap on are currently the ones that are being used the most. Okay. The spread manipulation is huge right now. And it's not just on these large price tickers. It's happening on lower price tickers. And a lot of times what you're seeing, like AMTD could not have had any spread manipulation in here when it was low. Okay. And then all of a sudden when it broke out through 8, that's what they had to use to get these big pushes. Okay, so typically the spread manipulation becomes very evident in the higher price. So maybe around this $6-7, you started seeing the spread manipulation kind of kick up. And so by being able to identify that, you're like, okay, we had a tight spread. Price action was, manipulated, but it looked more organic. There wasn't really hard manipulation. And now all of a sudden the spread is getting huge. They drop the bid and there's no demand. And then all of a sudden the bid gets pulled up. That can give you a sign to, okay, AMTD used to be one of the tickers I trade. Now I'm going to leave it alone.
Yeah.
I don't know if I answered your question entirely because I didn't quite understand it, but you were saying that there's an offer trap and it all gets bought and then it all gets sold.
Yeah, like straight away, just few cents above basically, and in 2 lots.
I think at that point, my first intuition when you asked that was to notice refreshing. So let's say the offer trap is sitting here. Let's pull up a better instance of an offer trap right there. 11.17, right? So let's say they rip through that, they buy it, and then they immediately sell it. Well, who's going to refresh at that point? That kind of comes down to the same. That kind of comes down to the same instance we were seeing like on some other tapes where let's go to a lower price ticker. Let's go to what's low priced. ADN. Yeah. Okay. ADN. So, so remember when we were seeing both, oh, let's speed this up so we can find an instance. Remember when we were seeing basically there's a bid prop and an offer stack and they're just really not any movement. So you have stalling like here. Well, on this side, the bid prop is dominating, right? But so you kind of think of it like that. My point is that if you have a full offer trap and it gets them filled entirely, and then they sell it entirely, that is just an exchange. That's a neutral ground. Like that's a what do you call it? A tug of war that there's no winner. So there's really no incentive to trade that. It's not until you see that oversupply come in. Now, if you see that they have, 10-10 here, 10-10, and they buy it up and then they sell 10-10, and then all of a sudden you see a 30-20 come in as a refreshment on the offer, well then yeah, take that trade and see if it goes down. Make sense?
Yeah.
Like they're oversupplying the market, right? Because at the end of the day, it's, we get so hung up on patterns and tape and these concepts here are all in the messaging between us, right? The main focus concepts. But at the end of the day, what drives the market, right? In a perfect world, supply and demand, right? Supply is easily manipulated. Demand is not so much because demand is volume, right? And you learned today that volume or demand is manipulated very easily through spread. Okay. But if you see an offer stack and a bid stack and an offer stack that are identical, right? That whether that rubber band is twisted is not really getting twisted anymore. It's pretty neutral, right? And it's not until one of these sides wins. So now, okay, this is phase one. Now let's go to phase two. So then that offer trap is there. But now you see, a bid prop is there, but now you see an offer trap of this much, right? You're expecting that this rubber band is going to release that direction, right? Because over here, the buyer is the bid and over here is the ask. And and because of this extra force, that thing is going to release in this direction and it's going to smack this guy, right? And it's going to take him out. And so that bid is going to be back here while the rubber band is coiled at the ask still, right?
Yeah, it's a lot to take in.
Yeah, it is a lot taken. But the point is, it's as simple as this: supply and demand. So don't overcomplicate it from that. At the end of the day, supply and demand. But in terms of manipulation of what you're talking about and selling the full offer, I would want to see a refreshment of the offer and the bid and the offer walking down on the ad. The offer walking down on the bid on your example.
Yeah, so yeah, basically going below the offer trap.
Yeah.
If it was at 360, he bought like the whole 10K at 360 and sold it at 363, the same 10K lot. It gone below.
Put another 10K.
Below 260, and then you saw it like, yeah, something come up on the actual 260 previous offer trap. stack like, yeah, of whatever, 15, 20, 30.
Where did you see that? Because that's that's kind of an organic, move there.
Uh,
Like, what made you think of that idea?
I was looking at I think I had it posted somewhere, but I think I've deleted the image. I think I have it in may have been Friday or Thursday. I think it's this week. Yeah, there it is. It's on a SOPA. It was on SOPA. Copy. It's this one. Post it in the chat. So there was like, yeah, I think at 290 there was an offer trap. It sort of got bought up, and then they pushed it a little bit, yeah, like 92, and straight away sold 25, and then you can see again like 10K. So everything that was bought up got sold at that level. So the biggest sell was at 92, so it sort of in profit, and then it fell below initial offer trap, below 290.
Okay, that makes a lot more sense. That's just a successful offer trap. That's what you want to see. That was an oversupply. Make sense? So basically what's happening is, what I think is happening is throughout the move, right? You have a move that's moving, going up, retraces, going up. And then let's say here's the shelf and you have that offer trap, right? That rigger has shares that he owns from here, right? And he has shares that he owns from here. Would you agree?
Yeah, buying, trapping, pushing, trapping. So he buys on the dips.
Yeah.
He collected everything, all started the move, then adds there. Does a little distribution here, buys there, takes it higher.
So just for easy numbers, he has 5 here and he has 2 here, right? And then he goes up here, and in this little area here, he's able to acquire, I don't know, let's just say another 3, right? By that move that you said.
Yeah.
Okay. So when he buys those 3 million and pushes it up, he's probably not using the entire lot. He's probably using maybe a window of like 2 million right here. And then he flashes those, right? He flashes those. And then when the offer trap releases, that gate opens up, this thing shoots up inorganically. Then he introduces that 2 million, and he introduces that other 1 million, and maybe he introduces this 2 million, right? But he doesn't do it all at the same level. This thing shoots back down. He sold what you said. There's an equivalence. And then here he introduced this, and then here he introduced that. And then that's what forces price down. But I'm saying that he has these shares to sell as well. And so that's the reason for this. Remember, we talked about high frequency trading. Why do they do this? Trapping longs, trapping shorts, trapping shorts, trapping longs, trapping longs, trapping shorts, etc. And all that time, what is he doing? Turning shares into money, right? But I think the point of what you're asking is that's a successful, from the very little I can see, which is just this tape, that's a successful offer trap. Because look, he bought 32 million, he bought 40 million, 42, let's say 47. Okay, so he owns 47. So he unloads 25, 35. 35 and 4 is 40. 40 and 3, 43, and 43 and 4
47.
is 47. So yeah, that's just an equivalent tug of war. Right? But what did he do with what did the algo do on internals? Right? That's telling you the direction this thing went. I don't know what this ticker did. If it went up or went down, but based on what I'm seeing here, my guess is this was an offer trap. And because we have these cells here, my guess is this thing went down to maybe 250.
I don't believe it may have.
Oh, well, here's
Oh yeah, it went even no. Yeah, I think it went even lower.
So that was the final clear out. What day was that? Friday?
Oh, 8. Yeah, Friday. Yeah, Friday.
Right here?
It must have been. Yeah.
Yeah. See, so
No, not. It can't be Friday. Wait,
Thursday.
Thursday probably
Yeah,
because
this one.
I didn't trade Friday, so it must be Thursday.
Can you see my screen or no?
Yeah, I can.
Okay, here it is, Thursday. Yeah. I don't know if that was here, if that was here. I believe that was
That was at 14:15.
okay.
14:15. So I think it was this one.
Yeah. So without context, right? Look, so here's exactly what I said. Look, here's the pattern I was trying to tell you earlier, right? So let's compare the pattern. So what did I say earlier? Like, I think I said something about 1 wave, 2 wave, and 3 wave is just a clear out wave, right?
Yeah, yeah.
And look, 1 wave, 2 wave, and 3 wave is just a clear out wave. See that?
Yeah. So
This
this
is
is the
1 wave.
first.
This is your first wave. You
That's
can't, this is pre-market.
Oh, so you don't count that.
No, because it's coming from the lows. This thing's beat down. Like it's at $1.50. Like you're not going to trade it. You're not going to trade this thing unless it really extends, right? Like the extension here was, let's see, let's just say from the close of yesterday, the extension here to the first high was 60%, right? So, okay, last month, yeah, this is an A plus setup because it's a greater than 50% extension. But this month for me, I want 75%. So, okay, not quite there. So I wouldn't have touched this trade. But based on how it had done and the time of day, right? So biggest volume of the day here was a rejection. So I know from Trade the Matrix that most likely on a beat down stock like this, right, that's already had its day, and I can prove that it's already had its day, right? I can go to the daily chart, and here's the IPO, here's the sell-off, here's the initial push. That's the 1 year. Okay, that is the, why is it on a 2 year? Where's my, oh, it's right here. That's why. Sorry. Okay, 11/15 what? 21. Okay, so that was the IPO, right? And so I'm willing to bet SOPA on this secondary push, you're officially on the backside of this, right? I mean, this candle is backside. In order to overcome this, look, you got to defeat this level with higher volume than this, right? Which is way far away from that. This thing's already beat down. It's already made attempts to push here, rejection, push, rejection, push, rejection. How do I know? Big red volume, big red volume, big red volume, right? So in order for this thing to actually go, it's got to do higher volume than it's done in these areas. And just based on a pattern recognition at end of day, highest volume is typically 9 to 10:30, 9:30 to 10:30, which you know. And then it makes a grinding push, right? It's making a grinding push into the end of the day, and it's not really increasing in volume. Like if this thing went, the ones that you see that go crazy is this volume here is typically higher than this volume here, right?
Yeah.
And even if it's not at this point, as soon as it gets to the high a day area, it'll chop and hold, and then they'll bring in the massive volume and squeeze it to death, right? But when you see this 13, 14 o'clock, it's typically a rejection. So now let's mark that level. Let's see where that goes and lies on our volume nodes. Okay. Actually, we don't need to do that. We just need to go in here and zoom in on that and then pull this down and pull that up and slide this over, right? So 311. Okay, so there's the symmetry, right? Symmetry to here.
So by symmetry, you mean it's top of this node?
No, look at this volume right here, this gray. Let's remove this. Equities, appearances. How do you remove the candles? I forgot right now.
No idea. Never done it.
All charts, bar, equivalent volume. No. How am I having a brain fart on how to do that? Equities. There's a button. Unclick. General, show studies, highlight, show high low, show last price, show price subgraph, overlap. Think or swim. Okay, anyway, the line chart is fine. We'll just suppress, we'll steady appearances, black, 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 fly. Actually, let's go really black, 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 black. Okay, so what I'm saying is that you see this volume node here?
Yeah.
Okay, if I zoom out, see this big volume node right here?
Yeah.
Okay, so there's symmetry in that volume node, meaning that the left side of it is very similar to the right side of it, right? It's not like this one that's oblong. You see what I'm saying? Like this has symmetry. See how it's almost perfectly square? This one right here, from here to here,
Yeah.
right here. This one, I let you go. Where did I do that? Oh, it's because I was on that. This one, symmetry here to here.
And in on the other hand, which one you said not symmetrical?
This one here. This little volume node here. That's an LVN. So here, so this is a point of interest. So from here to here, No, not activate. From here to here, you have symmetry, right? In this area, but then the volume continues out over here, right? And so if we zoom in on this area right here, on a lower time frame, I would do it. Just do it here. You lose the symmetry of the larger volume node that's here, right? This larger volume node that we defined. Now you have LVNs, smaller microstructures, but the volume came in very hard at the end of the day, right? Or throughout the day, sorry, to create that resistance. So let's look at it. So look how the volume came in throughout the day and big red volume selling. So the biggest volume of the day is somewhere in here in the, it's probably around the 270, 280 area. And then look at where the VPOC ended up. Down here in 259, right? Why? Because it rejected here. So all that volume they were buying up, exchanging, shouldn't it have gone higher if this thing was going to break out? Like why keep rejecting that level? Rejected this level here, right here, the pre-market, then it rejected this level here. And every time it rejected, right, you came right back into what? The central volume node, right? To the bulk of the volume. So what is attracting price action? VPOC, right? Okay. And then on the final push, perfect timing, 1400, you get a push. Look at the volume, garbage volume, right? Relative to this, and especially, most importantly, garbage volume relative to this, right?
To high volume days.
What did the high volume day here create? It created this volume node here. Unsymmetric, inefficiency. What did this volume day create? It created this little volume purge here, right? What did this volume days create? Well, they created the main volume node here. And so basically, if you look at where to trade, this is where to trade, this is where to trade, this is where to trade. Based on this volume, right? So where's my first level? Let's see. Shit. Let's go to it'll show it on the chart. On the 1 minute. Okay, where's my first level? There it is, 303.
303.
Where's my next level? Let's go look. 414. Okay, but why is this level valid? Well, one, it's valid on the higher time frame, and also it's valid why? Because on the day that it's trading, not only does it have a pattern that we like to see, which is the triple wave, right? Triple wave with decrementing volume here, right? Triple wave, 1, 2, 3. And this decrementing volume. And not only that, like, look at this wave. How long did it take? All day. Right? Did you trade this?
Yeah, I did.
Did you catch a winner?
Actually, that was a good trade. Yeah.
Okay. What were you playing? The breakout?
Yeah.
Fake breakout?
Yeah.
Okay. So you traded this because it's like a day 3, day 5. It's a potential all day, or it's potentially something that already falls apart easily, right?
Yeah, more or less.
Okay. So
this
this
was like, because I'm more concentrating more on MDRs, to be honest. Because multi-day, runners.
Okay.
So
Yeah.
not day one. Sometimes maybe day one, depending what it's gonna do, but mostly MDRs. So I can I can have my set levels. I can compare my volumes from previous days, see what it did, and I don't know. It helps me create the sort of idea and a plan a little bit better, rather than trying to catch afternoon on a day one when it can do nasty squeeze at the end of the day or something.
Exactly. So those volume nodes, if this was a day one play, those volume nodes would have saved me, right? If I saw this and this was a day one, my first trade wouldn't have been until up here, because that was the big symmetry volume node. Let's go look at it. I'm learning this volume node stuff right now, primarily because I want to, what I say 414, which was this one, primarily because I want to be able to kill the day ones as well. 414. Yeah, so there's the first major separation of a volume attack right in here. So let me remove that so you can see it. Just remove that line. See this gap right here? This up here is called a value zone. And that gap right here is likely going to reject unless the volume, unless demand comes in. And then the next trade would be right here. 592. The next trade would be right here. Activate right here. And then the next trade wouldn't be till way up here, 13, which is never going to get there. That's for day ones. That's how I would play this if this was a day one.
So you can't. This is a potential trade. This level.
No.
Oh.
No, I don't use the ball. I mean, I can, but it's not going to be a full size trade. This is the bottom of a node. I'm expecting it to clear the node out because they want to clear this liquidity out.
Okay, because I was thinking, okay, so if it has this gap, this gap, so it comes up to more or less like on thin air, let's say. Well, it's not thin air, but it can come up quite easy because there's not much volume in that area, and then it comes up, so it hits like a ceiling. I see.
Yeah, but it'll likely break through that. I would be looking for it to come test this liquidity here. Like test this gap, which is testing this liquidity. Like if it came and created a bid all the way up here, I'm not trading this level with full size. I'm not expecting it to reject there. Because it's already filled a volume gap, right? So that means that if they were able, this thing got beat down and now they're able to consolidate it, and it was able to get all the way through this gap, which was a big gap with a lot of volume here, then the likelihood of it rejecting here ultimately is low, because whoever was empowering the stock to move it down through here is the same person who's empowering the stock to break out.
Yeah, well, yeah, I guess, yeah. If it's big consolidation and then it already sets itself above this, so it's gonna have big volume below.
But it's not even based on that. Like, think about it. What is this stock? What is SOPA? It's crap. They dilute, they raise. Like this move to squeeze that gap is so inorganic that why would they stop the move here? Why not go attack this liquidity and see how much they can rummage from that? Right.
Yeah.
And if they can beat themselves, if they can beat through this, then, at that point, they're going back for the highs, right? Even if it just like HKD did. Yeah, this is inevitable. This is unlikely to happen because this stock has history, and to manipulate, to do that is not easy. And I don't think this thing, it'll take maybe next year, this time next year, maybe this thing will be up, we'll be able to push up here above 950. But I don't really think, based on the history it has already of rejections, that anybody's dumb enough to buy this stock this high. I don't know what the float is. I don't remember what the float is, but their dilution intense.
Supposed to be 14 mil.
14 mil.
Yeah.
So it's increased. What is this eraser? Do I have my Epic pen open? No. There we go. Got it. So yeah, that's a good trade, man. That's a good catch there. I wish I had more desire to trade these super low price tickers, but I just don't.
Yeah, it's kind of my range. I like them around $3. I feel most comfortable with them. I can add like more size, and if I have a defined risk as well, so I can add more size into my actual risk.
Yeah. All right, Mac. Well, I need to cut it, man.
No, yeah, man, it's almost midnight. I still need to walk the dog and get some sleep as well and digest the whole information.
Yeah, just watch this over and over again, buddy. Just try to watch it as many times and watch it on fast speed and then just take it in, like put it in your brain without studying, watching it fast speed a bunch of times and then I'll and then watch it slow and study it. What I'll do is I'll create a folder like this for you under mentoring. So folder.
Yeah, you already have one.
Oh yeah, there you go. I didn't make one. Okay, so then I'll put it in there. I'll render it in there and send the video over.
Oh, sweet. Thanks a bunch.
I hope it was useful.
Definitely. And yeah, just need to rewatch it multiple times and just get the grasp of it. And,
Yeah,
and fix my windows as well. Montage windows and layout.
yeah, and I'll put you in that room, and I'll also be sending you over some things to work on. But the main thing you want to be doing right now is just watching tape, and watching that video. Stop at like one of the lessons and watch some tape, and then just watch as many tapes as you can and try to identify nuances in the tape, and then combining those, learning to combine those different techniques.
Yeah, will do.
Okay, buddy. I enjoyed
Yeah.
it. Have an excellent night. And
thanks a bunch.
Yeah, thank you. No, I enjoyed it.
And catch you tomorrow probably.
What's tomorrow, Monday? No,
Yeah.
unfortunately, I got a bunch of meetings for the house, so I won't be around this week. So not trading at least, but you guys have questions, just shoot me a
quality over quantity.
Yes, sir. Yeah. Yeah, for sure.
Nice pleasure, man.
Okay, Mac. Thanks, buddy.
Take care. Bye-bye.
Bye.